Well, the man of the hour himself is here, Mr. Don Durrett. The anticipation is over. We've got him back. Joining us once again here, this is the 11th edition of the Gold and Silver Spaces. Don has joined us to speak to the markets and the song they're singing, especially as it relates to the opportunities in gold and silver and the precious metals landscape. John had joined us July 23rd, so it was about 9 weeks ago, which is interesting because there's a lot of synchronicities to today from that moment in time, and we're going to get to that. I kind of want to talk about that. But a lot of what Don had told us then has panned out quite well, and we'll get to those things individually too as we go on. But before we get started, I actually want to give Don a lot of credit for his prescience in the prior interview because, like what I said, a lot of what he said and his forecasts have already come to fruition. So I say that to give Don directly a compliment for what he had said in the past, but also for the listeners who are just tuning in, especially if you don't know Don. This is the kind of interview you want to perk your ears up for and hear what Don has to say. You know, he's really in tune with the macro. He's got 40 years experience navigating these markets, the ups and the downs. So it's really worth your time to kind of shut out the noise and really dial in here. For those who don't know, Don is also the founder and publisher of the Gold Stock Data newsletter. He's well known for his comprehensive due diligence and coverage of the entire sector. I mean, the guy's a Rolodex of the entire sector. He knows every company, every name. He knows everything about them. And he's got a special penchant for sniffing out the 10-baggers in the space. He's also a successful author, including books related to the gold and silver sector and how to invest, especially as it relates to mining stocks. He also has several other books related from a variety of topics, from politics to personal well-being and even spiritual health. He's a contributor to Seeking Alpha. Mr. Don Durrett, thank you for taking the time to come and join us today. It's a pleasure.
Thank you for having me back. I wanted to mention something about the book. So I wrote the book back in 2010, I think. It's the only book since then, so it's been 12 years since it came out. It's still the only book that really teaches you how to invest in junior mining stocks that I'm aware of. It's basically a textbook. I tell people that you need to read it twice to get an understanding of kind of how to understand the risk of investing in a gold and silver mining stock. So I kind of want to start there.
Yes, sir. Well, I'm looking for my next book. I'm actually reading The Theory of Money and Credit right now by von Mises. I've never actually read it, so I'll put you on my list for the next one to read. I'll start with that one.
Excellent. Then you can give me a review when I come back.
Yes, sir. Yes, sir.
So right when I plugged in, the first thing I heard was somebody had bought First Majestic, and I wanted to say something about First Majestic. So I was at the Beaver Creek conference. Was it last week or the week before last? The week before, actually, it was last week. And I was with Larry Lepard, and then he went to the Denver show. They're kind of back to back, and he met with them, and he told me that they had pretty much fixed Jerritt Canyon, and this is kind of something that people aren't aware of. So the last financials at Jerritt Canyon, everybody thinks, First Majestic is a big mess. I don't think it is. So the last quarter, Jerritt Canyon, the AISC was over $2,000. I think it was like $2,100. However, Larry found out that they told him basically in a one-on-one that Jerritt Canyon was fixed. So I sent. And he said that they were going to get their cost down to 1,200 AISC. So I sent an email to First Majestic yesterday, and they replied back. The IR person replied back, and he said that indeed their target, and now it's not going to get fixed immediately. It's not going to fix probably in the first half of next year, but their target is to expand production at Jerritt Canyon. I think he said 4,000 tons per day. And after they do the expansion, they're targeting an AISC at Jerritt Canyon in 2024 at $1,200. That's a game changer for First Majestic. They're also targeting production to increase by the end of 2024 to between 45 and 50 million ounces AGEQ. So they're currently at 34. So that's a 50% increase for a company of First Majestic size. So if you do, the way that I value companies is future use future PM prices, and then I can use their future free cash flow, and I calculate their future, what I think their estimated future market cap is going to be based on a multiple. I'm usually pretty conservative on my multiples. I think the free cash flow multiples are going to be a lot higher than they are today as the price of gold and silver go up. And so First Majestic is actually printing after, say, the end of 2024, after they get all this production in, is a 10 bagger, which is amazing. So I thought I'd bring that up.
So a very good value under $7.
Yeah, unbelievable value. If you're a bull, if you're a gold silver bull, and I always tell people you shouldn't be buying gold and silver mining stocks. You can trade them, absolutely can trade them if you're a trader. But if you're not a trader and you're kind of a speculator investor, you should not be buying gold and silver mining stocks unless you're a gold bull, silver bull. Now, what do I mean by that? I mean that you believe. I mean, you don't think, but you're literally a believer that gold and silver prices are going up. And you believe that because of what's happening in the world today, what's happening in the economics today, the macro world. That's the reason why you buy gold and silver mining stocks, because you're a believer, because the volatility is just too much. You can't handle it. It just beats you up. But if you're a believer, it's like, you don't really care about volatility. So I throw that in there.
So what do we owe the credit to this change? Is that Keith Neumeyer figuring this all out, or is it a stroke of luck?
No, it's Keith Neumeyer and the team. They basically have, from what I'm hearing, is they pretty much have fixed Jerritt Canyon. It's just a matter of time. So we're looking at maybe 18 months, possibly 12. But I'm thinking probably 18 months until it really gets fixed. They got to expand production there. So it's the expansion is the key. So, but I love these stories. I love it when it takes, 12 months to fix something, because, everybody's ignoring it because everybody's focusing on the next quarter. But if you can project out 12, 18 months, you make a lot of money if the price of gold and silver go up, because you're just getting it on sale. Like I said, it's printing basically as, 5-10 bagger here. So, and once they fix the problem, they're going to be a rocket, basically. Institutional money is going to jump all over them. Their silver, so if they get Jerritt Canyon down to 1,200, their mines in Mexico last year, we have had inflation. So let's go back to like 2021. In 2021, before they bought Jerritt Canyon, their break even was about 16, 17. So let's say it's gone up 18, 19 maybe, which is kind of nasty. But so I would say that once Jerritt Canyon's fixed, their basically break even is going to be under 20. And once silver's at 30, that's some really serious margins. $10 an ounce on 50 million ounces. That's huge.
So Don, I wanted to ask you something. You're well known for your newsletter, and you've taken a lot of time to put in a lot of due diligence and all this research and study that you do. And sometimes even recently, you've just put out kind of lists of here are the best names. Here's what I'm looking at. Here's what I want to own the most. And you rank them from top to bottom. Why? And why now?
Yeah, the reason why is because of Beaver Creek. So I went to Beaver Creek and I met with 50 companies. And so after I got done there, I started feeling kind of comfortable with my, my rank, if I could rank companies. I just got a comfort level of ranking them. I already knew them fairly well, but this really reinforced my ability to analyze companies. So basically, I own most of them. I own like 160 mining stocks. So I own most of the companies I met with. This was actually the first gold show I went to, and the only reason I went to it is because Larry invited me. I'm a consultant for Larry's his fund, so he invited me to come along with him. And so I met with these 50 companies, and basically what they were telling me was fit my analysis. So it gave me confidence that I knew kind of how I was looking at these companies from afar, from a distance. So I decided to rank them, and first thing I did was I think I ranked silver stocks on Twitter, and then I decided what the heck? Why don't I do this on Substack? Because if you do it on Substack, you can edit. So you can't, on Twitter, you can't edit your tweets, but in Substack, you can. So Substack made a lot more sense. So my Substack is free. So anybody can go to Substack, do a search for me. And so I just started doing these rankings on Substack. And so I'm going to keep them updated. So I have, right now, I have all the silver miners, and I have the producers. I've broken the producers into two groups, 500 million above, 500 million below, developers 500 million above, 500 million below, exploration 70 million above, 70 million below. And then, yeah, and then I did Australia. I did all the Australian companies today. So, and then I think I'm going to do one more. I'm going to do best of the best, which is my favorites list in the newsletter, which currently has about 24 stocks in it. So I'm probably going to add best of the best. So I just think this is very useful for people. I mean, they don't necessarily have to agree with me at all, but it's going to give people choices to what stocks to look at. Because what I've done is I put them in buckets. So if you go in there and you look at the silver miners, for instance, it has the top bucket is expected winner. And I'm ranking them. So I have IA first, Silvercrest second, GoGold third, Discovery fourth, Pan American fifth. Now, Pan American, I'd have them higher, but they have two huge projects that they need to build. They need to get approved. They get both of those approved, they probably go right to the top. Then you have First Majestic right below them. First Majestic should probably be higher, but they got to fix Jerritt Canyon. Again, it's about 12, 18-month deal. Then I have Hecla after them. I think Hecla's improved after they acquired Alexco. And then I have Fresnillo after Hecla, which I really like Fresnillo a lot. Adriatic, they're building a mine, really cheap. And then Endeavor Silver after Adriatic. Endeavor's going to, they're building two projects. After they build both, they're going to be a 20 million ounce producer. Silvercorp after Endeavor, they're going to expand production. They're going to double production, and they already have low cost. Silvercorp will be a lot higher, but the issue with Silvercorp is they're in China, so that adds risk. And then after them, I have Guanajuato Silver, who's going to expand production to 6 million ounces. So basically, I have all these expected winners, so people can kind of go in there and take a look at all of these, the top names that I've given. I think it's, I know all these companies, so I think it's a really useful thing for people. I mean, I'd love to have a list like this when I was starting out. Then I have another bucket called should be a winner. And of course, these are stocks that they have much higher risk than a likely winner. But if things fall in place, every stock in the should go up to the winners list. They just need to, get over a hurdle or two. And then the could-be's are higher risk. And those are the ones, people need to realize that if they're owning a could-be, these are not slam dunks. And then the other thing about this silver list is like, wait a minute, my stock's not on there. If your stock's not on there, you got to think, wait a minute here. If Don doesn't like it, why not? There's something here. If it's not even on Don's could-be list, then this thing has a lot of risk. And people can tell me, hey, wait a minute, Don, this stock should be on here. And if I agree with them, I'll add it. Like I said, this is an editable, my Substack, I can edit it. So that's my answer.
So that's like investing with the cheat codes on pretty much if you want silver stocks. I definitely want to welcome Mr. Lawrence Lepard as a speaker as well. But I guess the question I have for Mr. Don Durrett is that as far as valuations, if you had to call it like a 1 to 10, where are you looking at both gold and silver stocks? 1 being, this is just a once in a lifetime opportunity, and 10 meaning they're just so overvalued that's just, you don't want anything to do with them. So on a 1 to 10 scale, where would you put, just in general, silver stocks and gold stocks? And if Mr. Lawrence Lepard wants to jump in as well after that.
Hey Larry, I just brought you up. I just mentioned it. Mentioned Beaver Creek and Denver. Did you hear my answer?
Yeah, I did, and we agree on a lot of stuff, as you know.
Yeah. So yeah, me and Larry, we work together. We both do a lot of podcasts. Larry does more than me. Larry's on the big shows. Kitco has Larry on, so we got an all-star with Larry.
Yeah.
You've been on there a couple times though. It's been impressive. Okay, so yeah, silver stock, gold stock. So you're talking about currently, right? You're talking about
Yes,
current value of gold stocks and silver stocks.
correct.
So I think that the real key here is when gold and silver turn around. So if you're buying right now, you could definitely still catch a falling knife. I think we're close to a bottom, but it's hard to predict the future. We don't know when this whole thing's going to turn. But for me, once it turns, I've been doing this since the junior since 2004, and I've actually been a gold bug since 1991. So I've been doing this for a while. So I mean, if I look at the upside potential of mining stocks, of gold and silver, for example, just the metals. If I look at the upside potential right now, I think it's better now than it's ever been. I mean, if you can go back to 2007-8 when the great financial crisis happened. There was a ton of risk back then. We didn't know if everything was going to implode and collapse. I thought it might. I thought gold might go to the moon. It got up to almost 2000, and then basically MMT came in. That period of time, I thought that we're going to get an incredible run, and it didn't happen.
Oh, looks like mute got put on there.
Oh, wow. How long was I on mute?
The incredible run that's bound to happen.
Okay. Okay. Yeah. I wonder how that got on mute. That's kind of weird. So now I think that it's even better than after 2008. So the run from 2008. So we actually gold bottomed in October 2008, and then it ran all the way to 2011 to 1900. And that was the fear trade. I think that we are getting ready to approach it again. I think the fear trade is really close. I think it actually might have kind of kicked off on Friday. We'll find out next week. I think we can really find out in the next 30 days. So it's really going to be kind of in the next 30 to 180 days. I don't think it's going to really be that long. When gold and silver turn and start this fear trade, and when that happens, I think that you're looking at gold and silver miners as literally, I would say, once it turns and we start trending, it's going to basically go up to like an 8, 9, 10. It's hard to predict the future, of course, but I think that what's going to happen is we're just going to get this unbelievable, epic, generational run in the metals. So once silver gets above 30, and once gold gets above, say, 2000, 2050, I think that's when it's going to start. So that's I think we have to get to those levels before we get to like an 8. And then it could go all the way to a 9 as if a mania kicks in. And then you're looking, 10's kind of, unbelievable, right? So we're looking at potentially a 9 to 10 if a mania kicks in. Once silver gets to about 40, 50, somewhere in there. It just depends how big the mania is. But right now, as of now, I think it's only like a 5, 6 because we're kind of in this in-between state where we could catch a falling knife. We could go lower. We're kind of in a danger zone here because the stock market, we don't know how low the stock market's going to go. So if the stock market sells off, and I think it's going to go down to 3,000, 3,300 S&P. If it does overshoot, if it goes all the way to 3,000, overshoots a little bit, you're really looking at gold potentially going down to 1525, 1550. And so that, you're getting ready to catch a falling knife. So I wouldn't really put it much more higher than a 5 or 6 at the moment. I guess Larry can talk now.
Yeah, Don and I've discussed this a lot. I'm a little more optimistic than Don. I think we're carving a bottom right here. And one thing I'll say is that, when it turns, you won't have a lot of time to buy them. And so, as an example, in the March 20, we went and examined the March 20 panic sell-off, and they all went down. The GXJ went down about 50% in a week. And then it, hit the bottom, and Jay Powell came in with, whatever it takes to save the system. And we went up 50% in 3 days. And so, the prices right now are cheap. Could they get a little cheaper? Sure. I mean, obviously, you wouldn't want to go being leveraged today, but if your time frame is long term, I think you can buy them right here, right now, if you can handle, maybe a 10, 15, 20% draw from here. And I'm not even sure you'll get it. My experience has been, as I've been nibbling away at these things, I mean, these prices are it's like these are private companies, some of these little ones. I mean, I look at a price and say, oh my God, that's cheap. I got to own some more of that. I get in there with my fund, I start bidding for it. It moves away from me. There's no supply. I mean, remember, the price is just set by the last seller and the last buyer. And if you got somebody panic selling or tax loss selling or whatever, they're just going to dump it. And, there aren't a lot of buyers sitting around ready to pick it up. Some people have got stink bids in there. And so it goes down, the stink bid gets hit. But you start trying to buy some volume and they move away from you. So, my view, I'm a little more optimistic, shorter term, having been in the gold game since 2008. I mean, I was kind of in it before, but full time in the gold game since 2008. I'm a little more shorter term, and I think gold is going to smell what's coming sooner rather than later. And I think all the stuff that's blowing up, people are going to connect the dots. I mean, they haven't fully yet, but boy, it's happening fast. I mean, look at the British pound, look at the Japanese yen, look at the 10-year. I mean, we're seeing historic, large, important moves, and things are going to break, in my opinion. And will the Fed continue to be tough? Yeah, because they're idiots and they have to be tough because they want to save the currency. But at the end of the day, if it comes down to, a disorderly market, i.e. the treasury market goes no bid, they're going to reverse. They have to. And when they do, and they're going to reverse in the same way that they reversed at the bottom in March of 2020, and this stuff is going to go bananas instantly. So, you can say, well, I'm going to be cute and wait for a little further down before I buy it. Or you can just start nibbling away at it now, dollar cost average over the next 6 months. I think it's going to happen this quarter. But, Don and I disagree on this a little bit. But, that's what makes markets, right? Nobody knows. And I'm always a little more optimistic. I always kind of think it's imminent that the currency is going to fail. And it's taken me, I thought it was imminent the currency was going to fail in 2008. And, of course, look how right I was about that, right? So that's my view.
Larry, I have a question on the funds, if you could speak to it at all. I've been curious for a while, like not just in the junior space, but all of the silver space. It's so small. It's like 40 billion, 35 billion market cap. Like, how do you think funds are? Because it seems like everybody has the same plan, right? I'm going to wait until the Fed pivots and then I'm going to get in, right? To your point, I think it's
who's going to sell to you when you go to buy at that point? That's my question, right?
Yeah, it's like, how do funds view that? Like, are they like, you think they're like accumulating heavily now in prelude to that?
Well, it depends on the fund, depends on how smart they are, depends on what they're doing. I mean, we're not getting big inflows. So I must say I'm accumulating, but I'm selling things that have not been drawn down as much, and it always kills me to sell any of these companies because all the stuff I hold, I love. But, I'm trying to buy the cheapest stuff all the time. It's money has to come into the space, and the psychology of it all right now is just dreadful. I mean, if you follow me on Twitter, you saw, I can't remember who it was. Somebody had that bullish percentage of gold miners chart, up recently. And, we're as low right now as we were back in 2015. I mean, which was the end of the last, well, not quite. We're just above that. But, that was the end of the real bear market from 2011 to 2015. And we're as low as we were. I think we're equally as low as we were at the bottom in March of 2020. So, it doesn't, when you get totally oversold, I mean, can you get a little more oversold? Yeah. But, it's like, I think you got to buy them. I just think you got to buy them.
So you're actually speaking of my strategy. I am accumulating right now, in part because of what I'm seeing in the charts. It's interesting you mentioned 2015, but I am saving some cash in the event that we do get this liquidity type cascading sell-off where I can buy what I would expect to be some type of a V bottom. I mean, whatever catalyst brings off the sell-off, should it occur, I feel like it's going to be exactly the reason why you want to own gold and silver in the first place, right? And so in my mind, I would anticipate, a 2020 type of rebound, or even in 2008, the way the metals V'd there. But it's interesting that you pointed to 2015, because when I open the charts on the monthly view, there is a direct correlation to where we are right now. And just on simple indicators, RSI, breadth, distance from the 200, that points back to 2 to 3 significant levels, and that's 2020, 2018, and 2015.
Right.
We are, and so it's blowing me away because in all of these timelines, these were exactly where you want to buy.
Yeah.
And so can you speak to a little bit, especially as it relates to silver, what was it in 2015? Like First Majestic went up 600% in that time frame.
Right. Well, it was just the accumulation of a long bear market. I mean, it was just brutal. And that was when they did the Shanghai Accord. And what happened in 2015 is that the government realized that the entire shale oil industry was going to die if they didn't get some inflation going. So they got together and they attacked the dollar through the Shanghai Accord. And gold smelled it and went berserk. And, those kinds of moves can occur when something is just as severely undervalued as it was at that time. And as you'll recall, 2016 was a great year. I think it went up 80 or 90% that year. But, we gave a lot of it back in 2017. It was a breakout. And that was when Michael Oliver said, hey, we're out of the bear market. But it took a while. We had 2017, 18, and 19 were kind of choppy. 17 and 18 certainly were kind of choppy. I think I definitely was down in those years. Not a lot. But, and then 2019, it started going again. It's interesting to me, in 2019, it broke 1365, which was a very big overhead resistance level. And it did that, way before all the, the March 2020 stuff. But it's almost as if it smelled it. It saw the pivot. It saw the 2018-19 pivot, and it saw the repo blowout. Or, overnight repo rate blowout. And it just started smelling it and went through 1365. We had a great year in 2019. We're up 97% or something. So, this is the way these things trade. It's a very hard business to be in because, unlike the S&P or unlike a lot of things, it's feast or famine. The bad years, you just want to throw up. Like right now, most of us in the space just want to throw up because inflation's raging. We should be making a ton of money and, we're getting our asses kicked. But the flip of that is we know if we've been at it a while, which I have, what's on the other side of this. And Don helps me with my fund. I think he and I both agree that when this thing turns, my fund's going to triple, probably over a year or two. So, but it's hard, and you also want to sell them at the top. To some degree, or lighten up at the top. And, not to brag, but we were selling some in the top of 2020. It felt frothy. But I didn't sell everything. I stuck with a lot of good stuff. So, when they're, you can watch that bullish percentage of gold indicators chart, BPGDM, which you can see on, I use Stock Charts, I think has it. I think that's a very good timing indicator. When that thing gets up into the 80, 90, 100% range, you should tend to want to be a seller or not be buying at a minimum. And when it's where it is right now, you ought to buy them all day long.
Mm.
I wanted to make a point about buying the dip here, about the leverage, the opportunities. A lot of these stocks right now are trading so cheap. This is the time you want to buy. So I've learned through, the bear market of 08 and 07, 08, and then 2013 to 2015, is that the best time to buy is during these big dips. So I'm actually, even though I said, you kind of, if you're risk averse, you want to wait till it turns so you don't catch the falling knife because it could go lower. But if you're like me and you don't really mind taking on risk, I'm buying to the bottom. I'm actually going to buy all the way to the bottom, and then I'll buy all the way until the HUI gets to about 220, 230. That's when I'll stop buying. So as long as it's, I don't really care what the price is. I'm just going to look for opportunities, and there are tons of them. So the way I look at it is this is your chance to improve your portfolio. You come out of this with a better portfolio than you went into it, into the correction. So if you're a silver bull or a gold bull, this is really the opportunity to buy these stocks. Unbelievably cheap, if you will.
I think there's an important point to be made here too, Don, for everybody listening, and that is that, this is a tough business. I mean, you're breaking rocks and you're trying to replace the rocks that you broke every year, or else you've got a diminishing asset. And, Murphy's Law of mining is very real and it applies. And, you can almost, I've had companies I'm absolutely sure are fucking super winners, great companies, and they blow up. And so what does that mean? How do you deal with that? Well, you're looking for asymmetry. You're looking for things that can be 4 to 10x your money. And you got to recognize that a couple of them are going to blow up. So I guess the point I'm trying to make is you would never want to be doing this game with 1 or 2 or 3 names. It's just too, you're taking much more risk than you need to take. You should be systematically spread over 10 or 15 names on a more even basis, or even in a big index like GDX. I happen to think you can beat that index because it's got crap in it. But, that's a different matter. But my point is that, you should try to find a list of the best names that you can, and then you should spread your bets around, because you just don't know which, no matter how smart you are, it's hard to tell which one will outperform and which one will blow up. And obviously we knew the blow ups, we wouldn't buy them, but you can't really know. There was a good development story in South America called Rio 2. Thankfully, I didn't buy it. I was always kind of a little leery of it. And they just, the Peruvian government just, I'm not sure if it was Peru. Was it Peru, Don? Where are they located?
Chilean.
Chile, yeah. Sorry, the Chilean government just fucked them. Just said, no, sorry, no permit. Stock lost 80% of value, right?
Yeah.
It might be a buy now because they might be able to rescue the permit and get it back. But, and that's the kind of thing that happens. A perfectly good company, great plan, etc. I was tempted to buy it. I just didn't.
Yeah, this is why in my book I say to keep your allocations low, because you can't pick. It's really hard to pick winners. You don't know which stocks in the mining space are really going to be the winners.
Well, which ones are better than the others. You can put them in 2 buckets. You can look at them and go, because you and I do it, and you do a really great job of it. You look at it and you can go, no, this just isn't good risk reward. Fuck it, we don't need this one. But in the others, you're kind of like, well, this is a pretty good risk reward. Now, are they going to pull it off? We don't know. But if I had 10 like that, I'll bet 5 will pull it off and be multi-baggers. A couple will kind of be break even, and then 1 or 2 will blow up. You do the math on that, and it works, right?
Yeah. So this is where the diversification really comes in. So I want to be overweight producers, because the producers are going to benefit as the price of gold and silver go up, because their costs are not going to go up as fast as the price of gold or silver. So they're going to immediately participate in the movements. And so your developers and your drill stores, your explorations, they're not going to participate as much. It really depends on the quality of the story, how far along, if a drill story is drilling out a property, or a development story is advancing. But it's really easy for those stocks to get, kind of stuck. They don't really move. So you got to go ahead, Larry.
No, I was going to say, I completely agree with that. There's some funds that do nothing but chase drill stories, name unmentioned. And I think they're setting themselves up for big heartache. A lot of drill stories don't work. And the Lacan curve shows you that even if they do work for a while, you got to figure out where the top is and sell them, because they're going to go into that big valley where they try and turn a deposit into a mine. And that can take between 2 and 10 years. A good example of this, I bought Newfound Gold, way back at 80 cents, and it went to 9 and I sold it. It went to 13 and I regretted selling it, but now it's at 4. So I don't regret selling it. And if I can get a little better grip on the deposit and they ever come out with a resource, which of course they've been dragging the feet on doing because it's pretty spotty where all the shit is, I may buy it again, but I'm not there yet. And the development stories, as I'm sure Don pointed out before I joined, the problem there is just this CapEx risk, and the whole process of building a mine is like Murphy's Law times 2. It's hard enough to operate a mine and do it, consistently and successfully. When you're trying to build a mine, you can run out of money over and over and over again, and companies have. And then you can get it built, and it doesn't perform the way you thought it was going to perform. Victoria, as an example, said there were going to be 200,000 ounces for years and years and years. They still haven't hit 200,000 ounces. Pretium, same story. They said they were going to be 15 grams per ton. Well, it turns out they were more like 7. So, you got a lot of variables in these development stories. I think people looking at this area who aren't, really accustomed to it and expert at it should stay away from drill and development. I think you should be in operating companies that have cash flow, because the odds of them failing are lower. much lower. And they still have a lot of upside. I mean, if the metals prices go berserk, these things are going to, Don and I mean, I love, Don, you got to tell them what your projections are for the prices of gold and silver. And then how you do the math. So Don comes at me, he gives me these names of companies, and he says, look, I really like this one. I said, okay. He says, Prince is a 12-bagger. I'm like, how the fuck do you get to that? and he said, oh, it's simple. I just use these numbers. Go ahead and tell me your numbers, Don.
Well, I use $2,500 gold, which I think is fairly conservative. And I use $100 silver, which is a little aggressive. I should use $75 silver, which would be a lot better. But I use 100 because it's kind of, 100 it's a round number. So I'm using 100. It's round. It's kind of aggressive, and I know it's a little bit aggressive on silver. So I'm kind of aggressive on silver, and I'm conservative on gold. But I think 2,500 gold is very conservative. I think I'm gonna have to move that up fairly soon. I'll be able to keep $100 silver for quite a while, but I'm gonna have to move up the gold fairly soon. One thing I want to say about the development plays is my experience is that you only make a lot of money on about 20% of them. And the reason why it's so low is because so many of them get taken out. They build them out and then they sell them before first pour. That's the killer. The other one, of course, is they have problems, cost overruns, dilution, problems ramping up. So it's very difficult making a lot of money on these development stories. You got to be careful. You really want a development story that's like 3 years out from construction or less, and you want a team that's really aggressively telling you what they're going to do, and they tell you they're not going to have trouble financing it. I mean, those are the ones I like a lot, and then they have a lot of exploration potential. They have a pipeline. I mean, like U.S. Gold, I found them. I really didn't have U.S. Gold as kind of a FOMO stock, but I met with them at Beaver Creek, and they blew me away. I was like, wow, this is a great story. I came back. I only bought 2 stocks when I got back from Beaver Creek, was Cassiar Gold and U.S. Gold. And basically, of course, what they both had in common was a lot of upside potential. They're kind of different stories. U.S. Gold's basically, they're really close to building a mine. They just have to permit it. Cassiar is more of a drill story, but it's a drill development, but I like them both. But the one thing about U.S. Gold that I like so much is this team knows what they have, and they want to build this thing as fast as they can. They don't want to give it away. You want to make sure you have a team that knows what they have. They know it has a ton of upside, and they're not going to basically give it away to somebody, the first guy that shows up and says, hey, I want to buy your company. So, that's what you really want to look for in these development stories.
Don has surfaced a very good risk. This has happened to me multiple times over the years. I mean, the people who are in the industry know what the quality and the value, where quality and value is. And, when I invest in something, I model it and say, okay, well, if this works, I'll make 4x my money. Well, one of the great risks is that it goes up 50% and then somebody comes in and gives a 20% premium and the board takes it. So now I've made 70% of my money, but I didn't make the 4x. That happens a lot, and it really pisses me off. I mean, Taranga got taken out that way. Continental got taken out that way.
True Gold. I remember True Gold.
Yeah, True Gold.
Del Radian. Oh God.
Yeah, I mean, I can list 10 companies where I had it right. The company was
T-Mac. Do you remember
T-Mac? Yeah, I was looking to make 5x my money, and I made 60%. It's like kissing your sister. I mean, you make a little money, but you're just like, fuck. I mean, to some extent, it's happening with GCM. I mean, GCM was a beautiful, clean story, and these assholes at Eris came in.
Continental was another one.
Yeah, no, I listed Continental. Yeah,
okay.
There've been a bunch of them. I mean, it goes way back. Moto, way back when. I mean, I can't, So, yeah, John's point is very good. You want to make, you'd like to think the management team is smart and knows what they have. You'd also like to think they own enough shares or have lines to enough shares. I mean, a couple of the good companies we met with at Beaver Creek, I mean, they basically said, we're nervous about getting taken out because we know what we got. And guess what? The majors do too. I mean, a good example of that. Remember, Don, when we were meeting with Cisco Mining?
Yeah.
Because he had the Canadian Malartic mine taken away from him in a bidding war. But he thinks he knows enough of his shareholders. He thinks he's got it under control. But there's no doubt Bristow would love to own a Cisco Mining. And whether he takes a run at it or not, who knows? But the problem that these public companies have is somebody can come in and bid 30 or 40% over, and because of the laws and fiduciary responsibility, blah, 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 you might have to consider the offer or put it to your shareholders. And of course, the dumb shareholders are going to accept 40% over when in fact that's the wrong thing to do, because the thing is worth 4x what it's trading at. So
it's the institutions that will take the 30% premium,
right,
because they want the annual returns. They don't really care about long term. They get a bonus. They get a bonus based on annual returns.
Yeah, it's Joe Foster. The guy's an idiot. I mean, it's just, yeah. So it is what it is. I mean, it's a difficult and interesting game. But if
let's talk a little bit about drill stories. So we kind of covered what to look for in development. So drill stories are actually more risky than development. So I said you get about 20% on 20%. You make a lot of money on drill, maybe 20 to 25, depending on how good you can pick them. Drill stories are more like 10%. It's 10 to 15. They're really hard. But the one thing that you can do on drill stories is you can only go after companies that have the goods. In other words, and the thing to look for is a discovery hole. People are always investing in these companies that don't have discovery holes. And so what is a discovery hole? So the discovery hole generally will tell you how big the mine's going to be. And unless the mine is like 2 million ounces, you're not going to make a ton of money. So let's say 2 million ounces at $100, that's 200 million. So if you get in at 10 million, which is probably unusual, you got a 10 bagger. You get in at, so if you get in, it's more than that actually. You get in at 20 million, you get a 10 bagger. You get in at 40 million, it's a 5 bagger. So you can actually identify, have a pretty good understanding if it's going to be a 2 million ounce deposit based on the discovery hole. So you want the discovery hole to be at least a gram meter of around 300. So if you can get one 300 or bigger, they probably found a pretty good sized mine. But if they're only like gram meter of 100 or less, no, it's not happening. 150 or less is probably not happening. You really got to get over 200. So look for that discovery hole before you go chasing these drill stories.
Excellent stuff. I feel like I'm at a mining conference. I'm sitting at the VIP table. So we have Wall Street Silver in the house with us as well. So Liberty, if you he had one or two more big macro questions, and then kind of the etiquette for the space. If you have a question that you would like to ask, raise your hand and we'll call you on up. So Liberty, go ahead.
Yeah, gentlemen, if you have the time, I'd like to talk about inflation and the Fed and interest rates and the dollar, if we can. Because look, everybody gets stuff wrong. I don't want to be wrong, right? And it's not about ego. Oh, I was wrong. It's because when it comes to your money, you have to be right. All right. And so if I'm missing something here, I want to understand. So we're coming off the heels of another 75 basis points hike. All right. In my mind, the way I see that, this is a mathematical game of sovereign debt. And I see a situation where the Fed is locked up. They can't raise too much or else they won't be able to finance the federal government. I'm looking at the bond market right now. You're talking about getting over $1 trillion in interest payments alone already. And you have Goldman Sachs now saying that they forecast close to 5% in the end as a target. Another 75 basis points in November. Help me understand how this is possible. Is there some kind of financial engineering that these guys are going to do? Are they trying to price out the politicians from the power of the purse to spend? Because if you look at what's going on in Europe, the UK is already offering tax cuts and more stimulus. Obviously, these things are just going to make inflation worse, regardless of how much you raise rates. If you keep stimulating and keeping demand to fight over this limited supply, inflation is not going away. Okay, so what am I missing here? What's the next move for the Fed, right? And how high can they raise?
I guess we all get a shot at this question, right?
Yeah, more the better.
Okay, I'll go first. So you said $1 trillion in interest for the federal government. I don't think that'll happen. I don't think the federal government can afford $1 trillion. I just think that's kind of a breaking point. And I don't think that the Fed funds is going to get to 4% for this exact reason. Because if you go over 4%, you start getting close to $1 trillion. And if they do get to 5%, then the Fed funds at 5%, then they do get to $1 trillion. So I think, 4% is like 800 trillion plus. So you're right. They cannot afford to have, it basically breaks everything because the deficit gets too high. The deficit basically goes back to 2 trillion. And then you have, of the 2 trillion, 1 trillion is just for interest. It breaks their balance sheet. It breaks their budget. That's why I think that they're only going to raise one more time in November at 50 basis points, and that's it. And they'll basically pause in December. November, I guess they're going to, I forget if the next raise is October, November. I think it's early November. Early November. So then they pause after that. They might actually come out after they raise 50 basis points. I don't think it's going to be 75. I think it's going to be 50. I haven't been wrong yet. I've been following the Fed. I'm due to be wrong. So I'm probably going to be wrong on one of these calls, either the 50, November 50, and then they pause in December. But I think the reason why they pause in December is two reasons. One, I think mass layoffs are going to start kicking in, which is they're going to get so much pressure to slow down. And then I think that they basically they're going to break the budget, number two, and then they're going to kill the economy. And then how much can they restart the economy? So I think they're going to start getting paranoid in November, really paranoid. And they're going to really realize that. And then you're going into December, and you go into December, which is the holiday season. You go into the holiday season and everybody wants to be really nice to everybody else. And it's like, are we going to really raise rates in December, right in the holiday season, when everything's falling on its face? I just don't think they will. But I don't think that they will lower rates for a long time. I think they'll pause. They might not lower rates until Q3, Q4 next year. It's going to be a while before they actually lower them, is my expectation. So who's next?
Yeah, I'll go. I think the question was your question, you kind of talked about what you think will happen. I think you pretty much got it right. What we don't know is if something will break and when it'll break. And by break, I mean, look at what's going on with the pound. Look at what's going on with the 10-year. I mean, the 10-year skirts up to 450 or 5, and the 2-year goes even higher. I mean, we've got signs of stuff breaking, and it's accelerating. I mean, the stock market goes down another 20%, which it feels to me like it might. We're going to be in a full-fledged depression or headed towards one. So, how they'll respond to that, I don't really know. But to address the interest question right now, last month, August, I think it was, the net interest cost of the government was $51 million. So if you take that times 12, it's about $600 million. But headed up quickly. I mean, a year and a half ago, it was $300 million. So, it'll be if rates continue the path they're on, we'll be at 900 soon. And the math just doesn't work. The other thing I think people haven't really focused on is the deficits have come down into the 1 to 1.5 trillion range, kind of depending on what you want to assume. But that's in large part, and this is an important point, Groman makes it, others have too, in large part because in April they got $600 billion above trend line in tax income. And you know what that was from? That was because in 2021, all the markets were at record highs. And so they had enormous capital gains taxes. A lot of people sold in 2021, and that brought in a lot more tax revenue. So going into the next fiscal year, which starts at the end of September, that $600 million is not going to be there because the market's going down, not up. And then they're going to have to adjust the Social Security up 10%. That's $1.5 trillion. So there's another 150 there. And then the interest costs are going to go up at least $300 billion. So if you see where I'm going here, we're headed back to a well over $2+ trillion deficit, maybe 2.5. And that's what drove all the problems last time, and that's going to drive them again. So it's coming, and the timing, the moves, the 50, the 75, the timing, when it blows up. I mean, it's all, who knows? I mean, we're flying with, broken instruments in a completely uncharted area of the world. I mean, who knows? I mean, it could all end tomorrow. I mean, but they could hold it together for another year, maybe. I kind of doubt it, but they could.
Right. That all makes sense. As the economy plummets and the tax receipts go down, the cost to borrow the difference go up, and this is unsustainable, right? And To me, it makes sense that the Lehman moment may happen somewhere outside of America. So we like to focus on the domestic U.S. economy. But what if Europe breaks first? I mean, could that be a reason for them?
There's that possibility. I mean, I think the other moment that's really critical is if they lose the bond market, which it appears they're in the process of doing. I mean, if the bond market, if the 2-year and the 5-year where they refinance themselves, let's say the 2-year went to 6% or something, and the 10-year went to, I mean, a lot of the debt is in the 1 and 2 and 3-year area. If you look at a chart of it, they can't afford that. I mean, they just literally can't afford that. And so, okay, fine. How do they deal with that? Well, the only way to deal with that is yield curve control, which means they start buying the bonds. And the only way they can do that is to have the banks buy them, and they loosen the SLR reserves that the banks are required to hold, and they incentivize the banks to buy them because they pay them a bunch of money in the form of that interest that they pay on the reverse repos. So, but what happens and what will happen is the world will realize, I mean, that we are really kind of a banana republic. I mean, we are printing money to pay our debt and pay the interest on our debt. And once that realization becomes larger and wider spread, it's all over. I mean, it's all over.
Yeah, I want to interject here. So I actually saw this coming, what's happening right now, a long time ago. I wrote a book called The Demise of America, which has a dollar bill ripped in half on the front of it. And basically what it projects is that exactly what Larry's saying, that the bond market's going to break. And once the bond market breaks, the whole world recognizes that the U.S. is basically a Ponzi scheme. And at that point in time, the dollar's going to crash. And so that's my expectation. So the Fed is really getting in a deep, deep hole here. Luke Groman talks about it quite a bit. And what's his name? Zoltan Pozsar?
Zoltan Pozsar, yeah.
Yeah, he sees it too. It's like the U.S. is in a big problem. It has a big problem on its hands right here. So the U.S. basically has economic dominance globally. It has military dominance globally. It's the only superpower. But that hegemony is really, it's fracturing right now. It's definitely fracturing. And the dollar is really the main kind of thing that holds it up, because the dollar is what's used for global trade. And so this is all really, I think this is a big transition point that it's really starting here. So we are re-experiencing September of 2008 right now. It's kind of happening again. So the Lehman moment is just about ready to happen. Yeah. I think it could easily come out of Europe. But remember, back then in 2008, our Fed was bailing out European banks, which is insane, right? Because they need dollars. And so it's kind of going to be the same thing. Well, so the Fed's going to have to print money. If they print money, you have stagflation. So this whole thing is really starting to break. I think it's going to break sometime in the next. And so that's when gold and silver is going to go take off.
Let me just add one other thing that my partner always points out. I lived through the 2007 thing. I mean, I felt like my hair was on fire in 07 and 08. The first sign of that whole thing cracking was the summer of 07, and it didn't culminate until the fall of 08. So we have to be prepared for it could take a little time for it to all unwind. Right. The two Bear Stearns housing mutual funds housing funds blew up in like July of 07.
Right.
And, we were kind of like, whoa. And then in March of 08, Bear Stearns failed. But they kept.
Yeah,
right.
Yeah, that's why I say it could take 180 days, but I just don't think it'll take more than 180 days.
I agree with that.
For it to come to culmination. And the reason why I think it'll happen faster than it did in 7-8 is because the world has much more leverage today, and the world is really kind of fracturing. Also, this is a dynamic a lot of people have talked about, but the U.S. and China, that whole dynamic, that whole trade dynamic is kind of broken. The U.S. and China, our relationship is really, it's shattering as we talk, right? That's a problem. Europe and Russia, their relationship is basically shattered, which is really, really important for Europe, all that cheap energy. Energy is what really makes the economy go. I mean, oil and the economy are, they're synonymous with growth, right? More oil, more growth. Cheaper oil, more growth. So everything is kind of breaking at the same time. The American political system is totally, fracturing, right? So it's like all the signs are there for, basically a financial crisis of some kind. I say that COVID has done a lot of damage to the economy, and that the economy is not going to come back to normal. And so what's the new normal going to be? I think the new normal is actually going to be a lot of winners and losers. And once the mass layoffs start, I don't think the economy is really going to come back. I think America is going to kind of go back to like the 1970s, where we kind of go into this period of malaise. I call it muddling. We're just going to muddle along. It's going to be like in the mud, and we're not going to be able to grow. That's what I see coming, and I think gold is basically going to take off at a certain point, and it's not going to come back down.
I have a question for you guys. So it seems like, people have been talking about the Triffin dilemma for a long time now. It seems like just within the last couple of weeks, we're almost, maybe not to the peak of it, but we're getting very close. Because it really seems that maybe we even don't get to the point where unemployment spikes before they have to make a choice on here. You guys think it's fair to say, with all the currency basically collapses against USD in Europe over the last 2 weeks, we're at the point where the US government's going to make a choice between basically addressing our own domestic concerns and letting our allies collapse?
Yeah, and I think they'll let the allies collapse. I mean, unless the U.S. bond market blows up. I mean, remember, there's also a political dimension to this. I mean, I think the Fed has gotten weaponized, and I think the Defense Department is involved. And, they're hoping, I mean, as Groman points out, they're doing it wrong by doing the Strategic Petroleum Reserve, but they're hoping if they can get oil prices down and asset prices down and inflation down, that they can beat Putin. And I think their view is, if we have to create unemployment and kill our allies to do it, tough shit. It's an existential fight against Putin. I think it's part of the thought process that's going on. But the limiting factor on that is their own bond market and their own deficits. And that's going to, it's going to become pretty good. They got very lucky with that big income tax gain last year out of the capital gains in the stock market. So that, their deficits right now aren't as bad as they really will be. And so it's going to catch up with them.
Yeah, I want to bring in kind of a thought bubble, if you will. So I think that Zbigniew Brzezinski basically nailed it in his book, the Grand Chessboard. That book, everybody should read that book. It really explains the dilemma that America was in after World War II. So after World War II, the U.S. became the dominant global economy because everybody else was kind of damaged. And so the U.S. basically, our manufacturing base kind of dominated the world in the 50s and 60s. So we had that 20-year run, if you will. But after that, once you got to the 1970s, the U.S. is somewhat isolated. The reason why it's isolated is because most of where everybody makes stuff and where most of the growth is in Europe and in Asia. And the U.S. is on the other side of the Atlantic. And so how does the U.S. maintain its dominance? Because it's somewhat isolated. So it's just what Brzezinski basically said was the U.S. needed NATO. It needed its influence in NATO in order to maintain its influence in Europe so that Asia and Europe didn't merge together. He called it Eurasia, which is basically whoever controls Eurasia controls the world. So the U.S.'s economic influence globally, it was basically at a certain point was going to wane. There was nothing the U.S. could do to prevent it because all your economic growth is in Asia and Europe. So it's just a matter of time before Asia and Europe basically meld and merge together. And so that's what this Ukrainian war is basically all about, is the U.S. had to make sure to keep, in order to maintain what it had as global hegemony, it had to basically split Eurasia and Europe apart. And how does it do that? The only way that it can do that is to make Russia the enemy. Because if Russia becomes friendly with Europe, then you have the merge. So you basically, China wants the merge, of course they do. So because that's what the Belt Road is all about. It's about merging with Europe. And so China and Russia and Europe, they're all kind of natural economic allies. And so the U.S. is over there basically splitting it apart. And the mainstream media isn't talking about this at all. And so this is what's really kind of coming to fruition. is that the U.S. is the outside guy. It's going to get pushed out. And that's what's happening before our eyes right now. And that's the transition that's occurring in this decade. And what does the U.S. do to maintain its standard of living? Well, guess what? There's nothing it can do. All it can do is muddle and kind of transition to and hope that there's some type of technology that comes along that allows it to, maintain its standard of living or extend it. It needs inventions. It needs technology, but that's about it. It can't really, it's too late. I mean, to bring back manufacturing and bring back a mercantilistic society. I thought that could have been done in the 80s.
That happened,
What?
That I don't know what that was.
Okay, if you have a question, raise your hand. So if you have a question, again, raise your hand.
It
If you have, we'll get your
happens
question in just a
now.
moment, okay?
Sweden.
I'll let Larry talk, or if somebody has a question.
Yeah, I think Don's right on this. And, just to kind of back him up on his point, if you remember the Trump presidency, there were 2 attempted coups against this man. One was over Russia. The other was Ukraine. And now look who's fighting each other. I think that's true. I think you're onto something with that. I like that.
Just read Brzezinski's book. It's clear as day.
Can I bring up something for Don, please?
Yeah.
Hi, Don. Mid this past week, you made an offer to your Twitter audience about, I guess I'll call it a consulting, a personal consulting that you're willing to do for people on an hourly basis. I think you're asking for an hour minimum. Can you tell everybody, explain to everybody what it involves and what you're willing to do for people? I think it's a fantastic service that you're offering.
Oh, yeah. So it's not consulting, it's actually coaching. And so, I put it on my Substack. So you can actually go to my Substack and read exactly what I'm offering there. And so it's what I want to do in this coaching is I want to help people to understand the risk and reward of a stock. So you tell me what stock you want, and I'm going to show you all the red flags. So the red flags, so that you understand the risk. And so depending on the type of company, I'll tell you what to look for. And then we'll look for that particular company. We'll look at the upside. And so I've done one of these, and it was really interesting because, I showed him, the upside of this company versus all the other alternatives. And then I showed him all the risk. And it was actually he wanted to do 3 different development stories. So by the time we got done doing all 3, he kind of had a really good understanding on how to analyze a development stock. So I'm helping people to understand how to analyze mining stocks. And then in tandem with that, so basically doing both, the risk reward, the upside and the risk. I'm also giving people a quick overview of the website. So I'm giving a little tutorial on how to use the website because, it can be a 10-minute tutorial by me is like you spending 2 hours trying to figure the thing out. So I'm actually including that part of it as well if they want one. But it's mainly coaching on how to analyze mining stocks. So I think it definitely it's definitely something that people can learn a lot from. But thanks for bringing it up. Yeah, it is a good service.
Very good. I didn't even know you had that, so that's good to know. Nostra, you've been very patient with a question, and we'll get to you. Go ahead and ask your question. We'll follow up with more.
Oh, hey guys. I had a question for Don regarding Jerritt Canyon, that first Majestic bought.
Yep.
I believe their AISC, all-in sustaining cost, is $2,400 for gold. Earlier you mentioned they're eventually going to, fix Jerritt Canyon, quote unquote. What does that entail? How do you fix Jerritt Canyon?
They're going to increase production, I believe, to 4,000 tons per day. And so they're currently drilling 100,000 meters. So this is so they're going to cut that AISC in half from 2,400 to 1,200 by the end of 2024. And they're going to do it through, I think they're going to probably increase the grade. I think they know where the higher grade is. They're going to drill some out. But I think the key here is they're going to expand production. I think that's the key to getting the prices down. But there's something else, and Larry he actually talked to them. And the other thing is they're actually spending money. They're investing money into it right now, and those investments are actually going to help them to lower the cost. So they're spending money to get the cost down. They've been spending money this year and last year, and then they're spending more to expand production. But they're giving guidance that by the end of 2024, the AISC at Jerritt Canyon is supposed to be in the neighborhood of $1,200.
And it's better than that too. But go ahead.
Just to follow up, when you say they're going to increase production and as a result the costs are going to go down, is that assuming the majority of their cost is fixed based as opposed to the variable cost of mining?
I'm not sure exactly.
That's a piece of it. One of the things you got to understand. I met with them when we talked about this. One of the things you got to understand is that high AISC. They took exception to that high AISC, and they said that on an old-fashioned pro forma basis, i.e., the cost to mine versus when they took over Jerritt Canyon, it was an old, tired mine. It had been underinvested in for a long time. Okay. And so it needed to be fixed up, in terms of grade control, the process, everything. They had to put a lot of money into it to get it right. And what they said, and they were pissed off about it, what they said is that in today's world, what the auditors made them do was throw all those things, some of which they contend is long-term CapEx, into current operating expenses. So if you think about it, if you're fixing up stuff that's broken, that's going to last for 10 years, but you're being forced to expense that in the first year, that's not the proper amortization of the value that you just spent. Do you follow me? So those investments won't be as high or won't be recurring. And they told me that what they had done is they did it taking those investments out, just looking at how the thing operated, the money they made, the cash they spent to operate it, not the investments. And they were running at 1,200. So some of this is an accounting issue, not this thing is terribly screwed up and broken. I mean, it was behind. And you see this a lot actually, where when mines have been underinvested in, the first guy that goes in has to spend a lot of money to make them right. I mean, Sentiment's going through this right now. But once you get it right, then you're back to where you were and you've got good margins and you can run it for many, many years. So that's what, some of it I'm sure is a function of higher volume against the fixed cost. I'm sure there's a piece of that. I didn't tease out all the numbers in great detail.
Speak to the roaster that they acquired as part of the Jerritt Canyon?
I don't know. I didn't dive that deep. I didn't speak specifically about the roaster. I will say this: having a roaster in Nevada is extremely valuable. There are only a handful of them, and they're extremely expensive on a CapEx basis. I-80's got one. And I mean, to build a roaster today would be hundreds of millions, if not maybe even approaching $1 billion. So to the degree that they've got, anything close to an operating roaster, and I don't even know, I didn't dig in on that. That's a valuable thing to have, because there's a lot of oxidated ore that that needs roasting in that area, and you've got to have this piece of CapEx to treat it. So
true, and I heard the EPA will not be permitting any new roasters in the future.
That wouldn't surprise me. Yeah.
Next question.
Guys, I got a question on Pan America. Earlier, Don, you referenced those two projects that they're trying to get permitted. Two questions on them. One,
Sure.
It's always seemed to me that those two projects, you're basically getting like two of the top undeveloped silver projects in the world for free. It doesn't really seem that it's reflected in the valuation. So it sounds like you answered that question. Okay, I'm not wrong on that one. And two, do you know anything about the progress on the permitting basis? Has there been much that came out about that?
I think that Larry met with him. Did you?
Yeah, I met with him.
So, go ahead, Larry.
Yeah. So look, it's the companies I like. They're very, very careful and very conservative, not to get your hopes up too high. But what I concluded from the body language and the comments they gave me about the process they're going through in Guatemala is that I think they'll get Escobal within the next year. I think they'll actually, and if they get Escobal, that'll double their cash flow. If they get Navidad, that'll triple their cash flow. I think they'll probably get Navidad too, but I think it'll take longer. So, I mean, and who knows? I could be wrong. Maybe it's not 1 year, maybe it's 2 years. But I think as time goes by, more and more of these governments are coming to realize that done responsibly, mining gives your people income that they otherwise wouldn't have, and it gives the government income that they otherwise wouldn't have. And so the issue is, quote unquote, the done responsibly piece. And, you know, I was quite encouraged. I was quite excited coming out of the meeting. I thought, you know what, these guys are going to get Escobal in a year. And if they do, it's a game changer. It's not in the stock yet.
And there's something about Pan American that people should recognize. And that is they probably have the best management team in the silver space. And these are guys that have the potential to take out other companies. So once silver gets above 30, above 40, we're going to see M&A go nuts. Because at that point in time, everybody's going to want to buy these cheap companies before they go up. They don't want to buy them now. Now's not a great time because they don't have any free cash flow. They're basically, their share price is going to get killed if they try to do an acquisition, right? But I think that Pan American is going to go on a buying spree at a certain point and grow their company. Because First Majestic is another, elite miner, but they're very conservative. They don't like to grow fast. They bought Jerritt Canyon because Eric Sprott asked them to. They really are not an aggressive. Who have they bought? Who's First Majestic bought? Other than Jerritt Canyon, nothing, right? So they're not really an aggressive company. They're not going to go out there and go on an M&A spree. But I think Pan American will. Hecla will. Hecla is another aggressive company. They'll basically be in the market, but Silvercorp isn't. They're not aggressive. Endeavor's got 2 big mines to build. They can't buy another one. They're not going to be in the market. So it's probably going to be Pan American that does it. So put that in your head. I think that's another reason to own them.
Sounds like a buy to me.
Yeah.
Chapman, you got a question, buddy?
I'm coming up with one. Give me 30 seconds, actually.
Hey, Don, I would like to know a little bit more about Silver Tiger. They have excellent drill results. These things are phenomenal.
Right.
I'm very bullish on the company. Can we get a little bit more insight into that one?
Yeah. Me and Larry we have something to say about this. We went in and we had a presentation by Silver Tiger, and we walked out of there amazed. It was probably the one presentation we went, what the heck was that? Basically, their CEO was basically calling his project Tiger Grade. This is kilo an ounce, and he was so excited, and he was telling us that they found this discovery at this shell level, which wasn't that deep down. It was like 400, 500 meters down.
Less.
And they were building, I think it was like 250 meters, right?
Yeah.
And they actually had a tunnel, and they showed us a picture of this underground tunnel. It's called Level 7. And they were going to basically drill from there, and they were going to find all this Tiger Grade. And now we got this tunnel, we're going to find all this Tiger Grade. They was basically calling, Silver Tiger Grade, kilo, an ounce, 10 ounces per ton. No, more than that, 20 ounces per ton. High grade is an unbelievable grade. They're already almost at 100 million ounces. So I'm thinking, these guys are going to go, this is going to be a huge mine, a huge high grade mine. We walked out of there, we're going to go buy some of this stock immediately, But then I got home and I just, did some due diligence on what they said. And I looked at this one slide, and the slide had a drill hole through the shell, and there was no silver. Going, what? How come there's no? They said the shell has all this silver in it, and there's nothing there. So I emailed the geo that was in the meeting, and I said, the shell. It looks like the shell is only on the intersection of the vein, and they only have 3 veins. And he replied back that yes, it's only on the intersection. So you got 3 intersections. So how much silver can be there? And he says that the silver on the intersections goes about 50 meters wide. And so they projected it to be, I think, 3 million tons. So 3 million tons at 15 grams per ton was about 45 million ounces. So
it wasn't 15 grams per ton, Don. It was
15 ounces. 15 ounces. Yeah. So at 3 million tons is like 45 million tons. 45 million ounces, excuse me. So that turned me, I'm like, okay, they got something. They have a big right now the grade isn't that great there.
Well,
But it's getting better. I mean, the high grade that they're finding is definitely getting a lot better. But if you look at the existing resource, so the existing resource is like 45 million ounces and like 90 grams or something like that. It's not high grade, but the new grade is the new grade they're finding. So we know that they found a bunch of high grade silvers. We know that the story is improving. However, is it? I have it kind of ranked like, I think 10th or so. I like it. I like the story, but we thought it was a lot better. We thought it was, like a 300 million, we thought, because they were saying that they have this tiger grade that goes for kilometers, and that's not true. It isn't tiger grade.
Yeah, it does. I mean, yeah, there's a lot of debate about this. I mean, I think Don was angered that he felt like he'd been promoted by this guy. The guy's kind of promotional, and some people don't like him, but I actually kind of like him. I think he's a smart guy. He knows what he's doing, and it's a damn good deposit. I mean, he's hitting 2, 5, 7, 10 kilo intercepts, and there are a lot of them. And it's what is it? Isn't it like a 12-kilometer strike? I mean, it's a big, long strike.
It's
a lot
a big
bigger
property.
than Silvercrest, as an example. And my sense, I mean, it's very hard to know what a deposit really is when you're at the stage they're at, which is, I don't know, I think they've got 50,000 meters into it or something. I mean, they got to do a lot more drilling to know what they got. And my sense is it's a home run. I think it's a really, really big deposit, but I think Don thinks it's an acceptable deposit, not as big as I think it is. I mean, an AYA as a comparable is probably a known larger deposit, but AYA is valued at $500 million today. And here, I'll tell you what Tiger is valued at, 150 or something? I mean, what is, I've got Silver Tiger at, oh no, God. Silver Tiger's at 81 Canadian. Oh my God. That's a fucking buy. I mean, seriously. I mean, we don't know how big it is. That's the true answer. Okay. They kind of promoted us to be, it's at this shale level and it's all over the fucking place. And what Don rightly discovered is, no, there's some things through the shale where you don't find it. But there's a lot of shale in a lot of area. This is a $60 million market cap. I mean, there's definitely 100 million ounces of silver there. So that's,
Yeah, so it's gonna double in size from 44 to 100 million, and the additional 50 million is going to be high grade. So if you combine it together, so it's currently we know it's kind of projected out to about 100 million. So that's basically, they're going to develop this as well. And by the way, Larry, what he told us there, have they done a news release? No, it's probably too soon. They're going to come out with a news release here in a couple of weeks or in a month. It's going to be interesting, put it that way. This is at 100 million ounces. That's about a 6 million ounce producer. So Larry's right. It's super cheap. So it could grow. I think it's going to grow. I think it's going to probably go to 150. So let's value this company, right? So at 150, it's probably a 8 million ounce producer, but that's going to take probably, to get to 8 million ounces, you're looking at, at least 5 years, maybe 7 years. So my issue is it's kind of a long-term deal. But as an 8 million ounce producer, that's $1 billion company, and they're currently at 68. And it's probably more than $1 billion, depending on what the price of silver does. I'm just doing this off the top of my head, but they're going to dilute to quite a bit in order to drill and de-risk and develop this project. So, but yeah, I think they're going to develop it. I think it's a development story. It's going to be a long term. I don't think we're going to see them put this into production for, I'm guessing, 4 to 5 years for phase 1. And it's going to take them a while, phase 2, phase 3 to really ramp this thing up. So it's kind of a long-term story. But at a certain point, the gold and the silver in the ground, because it is a gold-silver story, is going to get revalued higher. So at 68 million US, it is really cheap. I like it. It's just that, yeah, like Larry said, when I walked out of there, I felt like I got, conned a little bit about this tiger grade for kilometers, because I was thinking, it's at least 300 million of high grade. and it's more like 150.
Can you guys talk about AYA next? That was one thing that stood out to me on your list, Don. I've been doing a lot of research into Silvercrest, and it was so impressive. I had to read like the report 3 times. Like it was one of the best like setups I've ever seen, in my opinion. But you like AYA better than that, so I have to hear the sales pitch.
Yeah, I love AYA. So let's just back up for where AYA came from. So AYA, the team that's running AYA is the same team that started Simifo. Simifo, the team sold it for $1 billion. And the guy that started Simifo, I really like his story. He was actually a philanthropist that was working pro bono for 17 years, just giving money away. And then after 17 years, he decided, I think I'm going to go start a mining company. And the guy had 0 experience. But he hired smart people around him. He went and hired, mining guys, and he let the mining guys teach him the business. So now he's been doing it. He built Simifo from scratch, turned it into $1 billion company, sold it, and then he started AYA. And so the team behind AYA is really good. And the thing I like so much about AYA is the property. So the property, the Zgounder property is 200 million ounces of high grade. So it's a really long life, low cost, high grade mine. Well, they have a second discovery called Bombardier that they think is just as big as Zgounder. So that's going to take it from 200 million ounces of high grade. And it's very high grade, just like Zgounder. And they probably have another one besides Bombardier. So we're looking at, I just love the property. I love the people. And I just think they're just going to keep finding high grade silver, and they're going to expand. The other thing I like about them so much, really smart team, very focused on shareholder value. So is Silvercrest, of course. But I think it has better exploration potential than Silvercrest. So I think it has more upside. I just think they're going to find, at least 2 more Zgounders. So, and the grade has just been absolutely phenomenal. And I love the team, the geology. I mean, these guys know how to find. They're going to find the silver. They know how to drill it out. They don't waste money. What would you add, Larry?
Just the same thing. I mean, it's not quite as cheap as I'd like. It's fully valued, but it's an amazing set of world-class deposits. Even if they just have Zgounder, this is a multi-billion-dollar company as they ramp it up. And as you and I both know, what they showed us is it looks like there might be a couple more Zgounders on that land package. I mean, you've got, the issue. Some people say, well, there's a Morocco risk. I don't think that's large, but, it's not Nevada, right? So I like it a lot. I mean, as you know, Don, it's one of our core holdings. I mean, I think the point that Don and I would both make is that silver, and I love the fact that Wall Street Silver is on here. He was on here. I don't know if he still is. Silver to us is really, it's just got fabulous optionality. It's better than gold. I mean, it's also riskier and more volatile, but some of these silver names are just going to go berserk when this thing turns,
Okay. Yeah. So I want to add one thing about valuation, because he said it was pricey, and I don't think it is at all. So their grade is 300 grams per ton, which is extremely high. And so they have basically low cost. I have their current cost at $18, but I don't think it's going to go up much from there. But their future production, I'm valuing them as a 10 million ounce producer, which they are going to be a 10 million ounce producer only from Zgounder alone. So from a Zgounder alone, at 10 million ounces, I have their free cash flow valuing them at almost $500 million in free cash flow. I have it at 492. So their current market cap is 567. So their free cash flow and their market cap is about the same. So I'm valuing them just a little over a 10x multiple, 5.6 billion. That actually makes their upside almost a 9-bagger, 900%. That's without Bombardier. So if you add Bombardier in, I think they're going to produce a lot more than 10 million ounces. So the upside on AYA prints higher than Silvercrest, and that's without Bombardier. So I think the leverage is amazing.
Let me just make a comment on Silvercrest, then I'm going to have to run because my wife is giving me a dirty look. But the Silver, what are you doing talking to people at 9:30 at night? Silvercrest, Silvercorp is a thing of beauty. It's a great deposit. The mine's going to perform better than they said. We own a big position in it. I think it's an easy double or triple. It's not a 10 bagger, or at least not obviously a 10 bagger. And the shortcoming on Silvercrest is it's a 10-year mine life, and they've got to find a lot more ore to extend that. I mean, this is not a Zagounder kind of deposit. Now there's a lot of silver in their area, so they'll find more. But I guess the point I would make is, at some point, I'm in Silvercrest right now because I absolutely think it'll re-rate and re-rate quickly as this ramp up takes place. So it's going to be a 2 or a 3 bagger. But when it becomes, I've got a big weighting. When it becomes a 3 bagger, I'm not sure I'll wait around for the next turn or two. I might lighten up and put it somewhere else. I'll just have to see. I mean, Don, you don't print Silvercrest as a 10 bagger, do you?
I do not. No.
Yeah, I mean, it's more like a 3, 4, 5, right?
Yeah, 5.
Yeah.
Can you guys explain that re-rating process? Like, I know it's common. I'm not sure I understand like the mechanics of it and just like what usually happens.
Yeah, guys, I'm sorry. I'm going to let Don do that because I really got to run. But it's been fun being with all y'all. I hope we helped you out a little bit, and we'll talk soon.
All right,
Thank
Larry.
you so much.
Great to have you, man.
Again.
Thanks for coming in.
Thank you.
Thanks. See you.
See you, Larry. Okay, so the re-rating. So Silvercrest, I have them rated as a 6 bagger. And so the re-rating is all based on free cash flow. So your free cash flow is going to get valued somewhere between, on a quality company like Silvercrest, somewhere between 10 and 20. And 20 is kind of where people are very excited about, owning the company. They think it's cheap. They think it's going higher. They're currently, I have them valued at 17, which is, pretty good. I have them next year at 42 million. So they're really not going to get their current market cap is 750 million. They're really not going to, they're in production. They're ramping up right now. They're really not going to get valued higher here until the price of silver goes higher and their multiple, their free cash flow goes up. That's going to re-rate them higher as the higher cash flow. So now they have to increase production. So I have them at 8 million ounces, but it's going to be hard for them to increase production. They really don't have a great pipeline per se, but I only have them growing from 8 to 10 million ounces. So I see them, their cash flow, I see them at right around 500 million at $100 silver. So I'm actually valuing them only as a 10 bagger at $100 silver, which I think is very conservative. Remember earlier I talked about how my multiples are very kind of conservative. I think they're probably going to get a 20. So as I'm valuing them as a 6 bagger, they could easily be, a 10 plus bagger at $100 silver with a higher multiple. So Silvercrest has a lot of upside potential as the price of silver goes higher. And the thing of beauty about them is their cost. They're going to be generating a lot of free cash flow, so they're going to grow. Companies that generate free cash flow find a way to grow. They don't just give all that money back to shareholders in dividends. They tend to drill and they tend to acquire.
Excellent. Jabroni, you have a question here, but I got one sent in through a message. The question is for Arizona Metals, AMC, not that one, and then American Pacific, which is USGD. I don't know if you have an opinion on either one of those.
Yeah, Arizona Metals, really interesting copper story. If you like copper, they got I'm pretty sure it's the same company that I saw. Let me double check on this. I really liked the CEO. He really knows what he's doing. And it's a big copper mine. Yeah, it's the same team. They got a really good CEO. They know what they're doing. If you like copper, Arizona Metals, definitely worth a look. Now, American Pacific, that's another one. I'm not a big fan of American Pacific. That's another copper story. They did well for a while, and now they've fallen off a cliff. I don't know if they're going to come back. At a certain, I know they were getting pumped a little bit, and they were running really good. I think this might be a Michael Gentile investment. They were up, and now they're crashed. back down to 33 million. I never had a lot of FOMO for it, but I thought that anybody that was into copper, it looked like it was going to really work. They have a 30% JV with Rio Tinto, and Rio Tinto, you know, they have long, deep pockets, and it looked like it was going to really start working. But I don't have any FOMO for it.
Thank you. Jabroni or Chapman, if you want to jump in.
I'll let Chapman go first.
Oh, well, very good, because I was just trying to find something real quickly. I guess this is regards to Hecla and Coeur. I don't know how you pronounce the latter one, if that's the correct.
I call it Coeur.
Coeur. Okay.
Coeur.
I guess in their class of companies, which I put them in, you know, large cap silver, however large cap silver is. How much does they lead the pack in terms of debt? How much of that concerns you, particularly for Coeur, because they seem to have a lot less cash? So
yeah, it doesn't concern me that much because they have the ability to raise money. Hecla and Coeur, they tend to do poorly during bear markets and extremely well during bull markets. And the reason why is because of their names and their demand from institutional money. So there's not that many mid-tier producer majors in silver. There's only like 2 majors. Pan American, well, you could say 3. Pan American, First Majestic, and Hecla. Coeur hasn't really made it to that major level yet. You could say Hochschild as well. Hochschild is kind of a same as Coeur. They're kind of a gold silver as well. Hecla's gold silver. Pan American, First Majestic's not gold silver. They all are. There's not that many pures left on the big side. Silvercorp, Silvercrest, AYA. They're the only really pure names. But I don't really worry about Hecla and Coeur going bankrupt per se. I'm accepting a lot of risk. I feel, you know, as far as I'm concerned, every stock that I own can go bankrupt. That's the way I look at it. I'm not going to put a lot of weight. I'm not going to be overweight any companies per se, just because I think they're going to work. I tend to keep them all down and see who the winners are. But I think that, let me look at Coeur's balance sheet right now. But I think that Coeur and Hecla are basically kind of twins. They're very similar management teams, similar philosophies. They both basically like to have debt. They like to grow through acquisitions. They're not really focused on shareholders. They like to pay their executives too much. You know, a lot of people don't like these companies per se, but they tend to do well during bull markets, and I'm all about owning stocks that do well in bull markets. So Coeur has a bad balance sheet right now, 547 million in debt. That's ugly, and they only have 56 million in cash. So that means they're probably going to dilute here pretty soon. Their costs are not super high. I don't think they're losing a ton of money. They are losing money though, right this next quarter. On the gold side, I have them at 1,800 break even. Annual production 330,000. So they are, and then on the silver side, I have them a 10 million ounce producer at $21 break even. So they're going to lose money this quarter, which is kind of nasty when it could be a really ugly quarter for them. And their cash could go all the way down to like 25 million if they burn through a lot of cash this quarter, and then suddenly they have a balance sheet problem. But they could raise 100 million in cash fairly easily. But the problem with raising 100 million is that's about 15% of their market cap. So if they did a $100 million raise, their share price would go down to probably close to $2. They would basically crash down to two and a quarter. That'd be nasty. So anybody that buys them right here is taking some risk. You could really be catching a falling knife here. So they're trading at 278. One thing that's interesting about Coeur, their all-time high is $70, which is nasty. They're never going to get back to their all-time high. So anybody that owned them way back then when they were at 70 and still holds them today, well, they did a 10-1. So that'd be I forget how much it is. I don't think $7 is their all-time high. I think it's much more higher than that. I forget what it is. I think it has to go all the way to $70 to be a new all-time high. Yeah, I don't really like buying Coeur here with this balance sheet with only $56 million in cash. I don't think they'll go bankrupt, but the problem is I think they probably could dilute shareholders pretty severely here, take a big hit. But the thing I like about them is Rochester is almost done. So it's like half built. And Rochester is actually going to lower their cost. And Rochester is going to add a lot of cash flow for them. It really should kind of turn the company around, the expansion of Rochester next year. And so while there is a lot of risk here with a really a poor balance sheet, I think once we get to the first quarter of next year, so they need to basically survive about 6 months, maybe 9 months before having to dilute. They don't want to borrow any more money. They could sell a mine to raise cash. That's a possibility. But Coeur looks pretty nasty at this point. But I think it's going to turn a corner next year. Oh, by the way, I think Hecla looks fantastic at the moment. So.
Yeah, Hecla was I think I trimmed that one on Friday quite a bit just because it seemed like it was it just seemed a little bit weaker than everybody else. Yeah, on the exchange it just seemed a little bit weaker.
Come on, Chapman, what are you doing?
I know. It just wasn't coming off of the lows on the day like Silver
Hecla's one of those that explodes on the silver moves. It really does.
Yeah,
I know.
It's okay. So
I've seen it.
I didn't go to the Denver show with Larry. Larry met with him in Denver, and he told me that he didn't own any Hecla. I've been trying to get him to own Hecla. He didn't own any, and maybe he owned a little bit. He didn't own very much, very little of Hecla. And after the meeting that he had with Hecla, he was very impressed. So he went into the meeting kind of bearish on Hecla, came out of it bullish. So for whatever that's worth.
All right. Well, I guess my other question is Adriatic. Are we a believer? Because
yes.
Their management seems to be so quiet, and it's just like
yes. I
look
don't
at it and I'm like,
I don't
is this too good to be true?
No. Okay. So I met with them. I don't own Adriatic, and I own 45 silver stocks. So yeah, I wasn't a believer. I was like you. I was on the fence, but I came out of there a believer because of its valuation. It's fallen quite a bit, and if the upside looks really, really strong. The other thing that I liked about them is their management team is aggressive. I like aggressive management teams. They actually have a goal of being the #1 mining company in Europe, not just gold and silver, base metals too. This is a very ambitious company, which I like. I like aggressive companies. They actually print as a 10-bagger. I have them growing to 12 million ounces of AGEQ. So 12 million ounces, they're going to be a significant player here. And they've crashed down to 411 million market cap. So their upside is very substantial. I actually added them to my buy list. They're not at the top of my buy list, but if this correction lasts 3 months, I might end up owning Adriatic. If it, it just depends on how long it takes for this market to turn around. But I have added them to my buy list after talking to them because I like their aggressiveness. I like their ambition. This is a company that wants to grow. They want to be a growth company. They want to be an I-80. They want to be an Equinox. And there's not a lot of companies in the silver space that are aggressive growth companies. There isn't any. If you think about it, you can't name a single one that's really kind of an aggressive growth story. I mean, look look at I-80. I mean, how fast that company has built, like, you know, four mines. You know, we don't have that on the silver side, and so this might be that company. I think Pan American could possibly be an aggressive growth story, but Adriatic, that's the impression I got from their team, is that these guys want to build mines.
Yeah, I mean they end up kind of being my largest holding because I buy them on the ASX, and I've had some spare money basically over through interactive brokers over there, and I end up looking at the valuations as I translate the Australian dollars back into US dollars, like, oh my God, this is like the biggest holding I have. So and granted, you know, I keep on buying them because they seem to have a lot of strength at this level. They don't seem to go lower, and I'm just like, this is gonna go pop off one day, and I'm just like,
it's a good holding. It's a good holding.
Well, very good.
All right, so great stuff, Chapman. So Jabroni, if you had a question, and then after that we'll get to Tom. I see James is jumping up. If you have a question, we'll just raise your hand and we'll get to you in just a moment. Okay.
Appreciate you guys letting me talk, man. I am going to be here for a brief second, so I'll keep it short. I just wanted to ask you what your read on Fortuna is, and I think I mentioned to you earlier a couple of days ago, Dolly Varden. So I don't know if you kind of got a little bit more familiar with that, but I was at the Silver Symposium and I talked to both management teams there, and I was impressed with Dolly Varden, and I think that kind of leadership, the difference that they have a kind of a finance guy in charge, to me, it was very intriguing. So I'm curious what you think about them. And, you know, Fortuna, I had kind of like a mixed experience with the conversation I had, and I'm a pretty big shareholder of them. So, you know, just trying to evaluate kind of how to move forward right now in this environment we're in. So if you have anything on either of those stocks, I'd be very interested to hear.
Well, can you tell me what Dolly Varden's strategy is for, say, the next 2 to 3 years?
So I'm pretty bearish generally. I mean, no surprise, we're in this space generally, but I actually asked Sean, I was like, you know, hey, so what are your what's your approach for like how cashed up are you for the next, let's say, you know, year? What are you going to do if, you know, credit dries up or it's not favorable? And you know, I had to push him a little bit, but he kind of laughed at the end. He's like, look, I have a strategy to basically cut down to the bare bones if I have to, but we're gonna, you know, basically proceed, you know, with the mine development. They're not actually gonna build a mine, though. I don't think. I'm pretty sure they're just looking for a bid at the end of the day. So, I mean, as high level as you can get, I don't know if that answers the question, but
yeah,
I mean,
it does.
Yeah,
it does. Okay, so we can value that company at about $2 or $3 silver. That's what they're going to sell it for. I don't think they'll sell it for $1. So will they get maybe $4? Depends when they sell. So it's basically 2, 3, 4. So we can use 3 as kind of a number in the middle, right? So now we have to guess on. We know what they're going to try to sell for. Now we have to guess on how much silver they're going to find, right? And then we can identify what we think their upside is. So they're currently at 42 million. How much? So we know they're up to 50 million now. So are they going to get to 100? Do you think they're going to get to 100 million? I really don't. I would say 75. What do you think?
I mean, yeah, I don't think when I look at these names, I don't assume there's the high. I'm pretty conservative in my estimates generally. So I would say, like, I look at them as what they have. And then when I talk to the people, I try to get an idea, how much are they selling me, right? Like, oh, well, we have all these estimates and resource. I mean, this is our expansion plan. I would go off of what their actual amount is if you're asking me personally.
Right.
But I'd say if I did, put a gun to my head, I'd probably give the middle range and play off of that. Does that make sense?
Yeah, but I think it's a bit conservative, but I think we should
say 75. Let's just go with that.
Yeah, I'm going to go with 75 times $3, which is 225. Now, I think that's if they wait, right? And I don't think they're going to sell anytime soon. So let's say they drill for 2 years and silver goes to, let's say it goes above 40, right? And I think that'll happen. So they'll be worth 225. So they're currently 42. They're going to dilute at least, say, 20 million on top of that. So let's take them to 60. So it's basically, that's a 3-bagger.
Okay. And I agree with you. I don't think they have no plans to sell. It sounded to me like he's very interested. Yeah.
Yeah. So is a 3-bagger, is that worth the squeeze? For me, no. I can find 5-baggers left and right. I'm not interested in a 3-bagger. That's where I'm coming. That's where I'm coming from. If it's a drill story, I want it to be at least 5-bagger potential. 3's not. That's not worth the squeeze for me. I'm not going to allocate my capital. Heck, I can invest, in Adriatic today and get a 10-bagger. Why am I going for a 3? Okay, so that's where I come down on that drill story. You got drill stories you want to get in early. Now, if you got into Dolly Varden, like it's at 29 right now. If you got in like at 15 cents, yeah, let it ride. I would say let it ride if you're got in at 15. Okay, so now let's look at Fortuna. Fortuna, in my opinion, was very, very lucky that they acquired Roxgold. They acquired 2 very good gold projects in West Africa. These gold projects are big, low-cost mines, close to the surface. They're building a second one right now. So I like Fortuna. If you like West Africa, I think Fortuna is a hold here. Maybe a buy as well. But they have problems in Argentina because Argentina is a mess. It costs 50% tax to get your money out of Argentina right now with currency controls. That's just ridiculous. So you can't take your money out, and they have 100% inflation. So you basically sell your Doré and pesos down there, put it in the bank, and it starts deteriorating. And what do? All you can do is spend it. And Fortuna's, they have a lot of free cash flow on that silver mine down in Argentina. So they have a mess in Argentina. Plus, they have a bit of a mess in Mexico because their permit, Mexico's giving them a hard time. That really hasn't been cleaned up yet. So they got kind of 2 problems. And then they have those 2 gold mines in West Africa. I think the gold mines in West Africa trump the problems in Mexico and Argentina, and I think it's a hold. And I think it's going to do well. I think they're probably going to end up selling that mine in Argentina, because the reason why is because companies need to spend their money. If you're down there in Argentina, there's a lot of companies down there mining right now. You got to spend your money because otherwise it gets inflated away. And so
I asked him about that. I can't remember who I spoke to, but guy kind of got really short with me about that actually, because I kept pressing him about just the jurisdictional risk and the different projects, right? I mean, that's a lot of different territory to cover. So that's why I was a little curious. I have a lot of Fortuna. I'm very overweight with it actually, and I got leaps as well. So I'm just kind of I'm glad you're positive on it though. That's good to hear.
Well, I think the 2 mines in West Africa alone are worth a lot more. I think you basically get the mines in Mexico and Argentina for free.
I love West Africa. I think that jurisdiction I think is generally not appreciated very much. So I think there's a lot of value there.
Interesting. I don't love it, but I don't.
Well, I just like the gambling aspect a little bit. I'm a little degenerate.
Yeah. I just have my fingers crossed that that we get good multiples of companies over there. As the price of gold goes up, we'll see. I'm hopeful. I'm not shying away from it per se, but I'm not in love with it. It's kind of I like Bolivia better than West Africa. Put it that way.
Gotcha.
And I like Nicaragua better than West Africa. I like Guyana a lot better. So we'll see how West Africa. I can compare West Africa to like Chile and Peru.
Okay.
Chile, I put them on the same category as Chile and Peru right now. It's like, depending on where your projects are in Chile and Peru, I think you're okay. Like, I don't mind owning Hochschild. Hochschild has projects in Chile and Peru. I don't mind owning Bear Creek, who has a huge project in Chile. No, actually, I think it's in Peru. I don't have a problem owning it. It's but the risk is there, right? You have risk in Chile and Peru. You have risk in West Africa. That's just how it is. And if you don't mind taking the risk, then it's okay. Mexico is a little bit better, but as time goes by, Mexico is going to be as bad as West Africa.
Yeah. No, I mean, it's always moving, right? The situation continues to be fluid in a lot of these jurisdictions. So, but like I said, I think there's a lot of these that people kind of shy away from. I think there's a lot of value there. So,
yeah, one thing you might want to do, I think I-80 and Equinox, you talk about Fortuna. I think Fortuna is basically a gold miner. Mm-hmm. I think that Equinox and I-80 are a lot better quality than Fortuna is. And you're getting the upside is probably better in both of those stocks. So, if you're overweight Fortuna, you really want to be more overweight I-80 and Equinox. Those two stocks, those two companies got it going on. They got some really, really quality properties with some really good management.
I'll look at them. Thank you. I appreciate it, guys. Thanks for letting me speak.
Sure.
Mr. Anderson, we'll take your question next and then get James, and then I have a fun little game we can play here with Don.
Thanks, guys. My question for Don is what his thoughts are on Viscount mining. Could this be a 30-40 bagger in terms of jurisdictional risk and then the two flagship properties? And why is it so under the radar? Thanks.
Well, it's under the radar because most of these small silver drill stories are all under the radar. Nobody wants to touch them. I own Viscount. I think it has a lot of potential. It's actually bounced pretty nicely. So I don't think it has jurisdictional risk. It's in Colorado and Nevada. So yes. Why do you think that's jurisdictional risk?
No, I'm saying that because of its great jurisdictional.
Oh, okay, gotcha.
Assets.
Yeah. It's in a good location. It has some discovery holes. It's got some resources. It's got potential. I think it's cheap here at $35 million. I'm not super excited about their management team, but I haven't met with them. I haven't really talked to them. I'm basing this on execution as I followed them over the years. I'm not, I can kind of get a feel for the management team on what they do from year to year, how they release the results, how they upgrade their presentations. The companies that really have it going on, you can kind of get a feel for them and you kind of get excited that this company's going places. I don't really get that feel for Viscount. But I like the properties. I like the drill holes. I like what they got. Yeah, this is a company that could really fly as the price of silver goes up. And they get more money and they expand the size of their properties. It definitely has a ton of potential here. But the one thing about Viscount, this is really one of those ones where I like to own a lot of stocks. I don't know which one's going to win. Viscount is definitely one that could win, but you can't bank on it. It's not one I would definitely go overweight on and bet that farm on. But it's one I want to own because it should work. It should be a 10 bagger. I think you said 20 or 30. That's not outside the realm of possibility. It definitely could. It definitely has 10 plus bagger potential. If silver goes to $100, companies like Viscount should be 25 baggers. This is like a perfect example of a company that should be a 25 bagger at $100 silver.
Yeah.
It should just be a rocket ship because all that silver in the ground is actually going to be worth a lot of money. Plus, they have properties to expand that resource. So, I mean, they're currently over 100 million ounces, and they could easily go 150. So,
Yes.
150 million ounces, at $3, that's $450 million. So $450 million, they're currently at 35. So that's like 15, 10x bagger. But, who knows? Maybe we'll get, $4 an ounce for silver in the ground. then they go up to 600 million. So,
yeah, what do you think about their partner Centerra over there in Cherry Creek advancing that project?
it's promising. It's definitely promising. I don't know how many drill holes. The key is, we need these companies to be drilling 10,000 meters a year or more.
Mm-hmm.
So I don't know if they're drilling 10,000 meters. So yeah, they basically have 3 projects. So we'll see how they do. Love their insiders though. They have 60% insiders. Love that.
Yes.
And it's somewhat tightly held. So we'll see how it goes. But I think Viscount's going to be a winner. We'll just cross our fingers.
Sounds good. Thank you, Don.
Sure.
Okay, James, you got a question, buddy?
Yeah, hello. I'm sitting in Sydney in Australia. And I came in quite late, so I don't know what I might have missed. But just firstly, one comment on West Africa, maybe. If the world's going to go through a rough time over the next couple of years with recession maybe and a bit of famine and things like that, then those sort of jurisdictions, I think the risk escalates a bit. You're going to be potentially taxed more heavily and so on. But
I'd agree with that.
Yeah. But my question, Don, somebody brought up Adriatic, so I'm straying into polymetallic now. But any comments on Emerita at the moment?
Yeah, so Emerita, we're getting feedback here.
Yeah.
Not sure why. There's something you can do to prevent the feedback? I think it went away. Okay, so Emerita. I love Emerita once they get AZN. I interviewed Doc Jones, I don't know, 6 months ago, and I really got a lot of people attacked me because I was questioning him that that this was a slam dunk, and it turns out that I was somewhat right to question the AZN because
Don, sorry to interrupt you. I'm just going to switch I switched the mic off, so I can't respond to anything you're saying at the moment. But
okay,
you can turn it on and off as you go.
Right.
Okay, so my feel was that the value of Emerita is their AZN, which we don't know if they're going to get it or not. That's in legal limbo. We're waiting for the courts to give it to them. And Doc Jones was under the impression, back when he was basically tweeting almost daily about it. I haven't seen a tweet by him in a couple months now. And so he basically he kind of went into hibernation. Maybe he was getting too much flack and he didn't like it because he's pumping it pretty hard there. So my feeling is that I like Emerita once they get AZN. It's called Asna-Kohler, but AZN for short. I think they will get AZN, but now it's kind of been delayed. But once they get it, they're drilling right now. But I think that AZN is really what's going to push that stock much higher. So it's kind of on the I would wait and wait until they get AZN, and that's kind of what I was saying in that podcast. Is that without AZN, we don't know what this company is going to do. And so, sure enough, it's crashed.
Don, have you got a feel for David Garr, the CEO? He was the the head of exploration for Falcon Ridge, I believe, right? So I assume he's a pretty blue chip kind of guy.
I don't know, but I haven't heard. I don't think I've heard him do a podcast per se. I'm really going off Doc Jones, and Doc Jones is a big believer in him. And I do respect Doc Jones, absolutely. Doc Jones does a lot of research. So I respect Doc Jones.
He does huge research.
Yeah. So, like I said, I like Emerita a lot if they get AZN. So.
Okay, thanks, Don.
Sure.
Okay, Don, I'd like to run my top holdings by you, if you don't mind, and tell me what you think, kind of rate my portfolio type gig, all right? I've looked at my top 5 holdings by weighting. I don't know if 10 is too many, but I would like maybe you could pick out the one to rearrange or the one to add to here. All right.
Okay. Go ahead. I got a pen.
Okay. Agnico Eagle, no particular order. Minera Alamos. First Majestic. Silver Tiger. Liberty Gold. Osino. Osisco Development. Silvercrest. GoGold. And Caliber.
Okay,
And
is Liberty Gold just the name, or is that fundamentals?
Hey, look, man. At this point, I'm trying to make my own Rick Rule story here. I just got bought that a little early. I'd like to buy it down low.
Is the last one Calibre?
Yes.
Okay.
And GoGold.
Yeah, I got it. Now, what do you want me to tell you about these stocks? What you want me to tell you? I can't tell you about each one. That would take too long.
No. I just am I, how would you rate it? Am I doing okay here? What's my weakest link?
Oh yeah, there you go. That's good. Well, I can pick out, but I'm assuming they're all weighted the same.
Very close. I can tell you that my top holdings are for sure First Majestic and First Majestic, Liberty, Silver Tiger as of recently. I had Orezone. I got in pretty early on that one, and I didn't feel like it had as much upside, so I rotated that into Silver Tiger. Silver Tiger is now number 5 as of Friday.
Okay. You have done a good job picking stocks. The only one that I really have a problem with as far as risk reward would be Liberty. And the reason why is because Liberty has not given us any guidance on where they're going here. We do not have a PEA on their second project. We don't have a PFS on their first project. They just seem to be kind of coasting along. So there's a lot of unknowns with Liberty. I mean, yeah, they got 2 nice projects, and if they built them both, they would look good. But management just hasn't given us guidance on it. So I'm really, I don't own Liberty Gold for that reason. I want to see a management team that's, giving me guidance to build, telling me exactly how much it's going to cost, all the economics, an aggressive team. That's why I like Osino so much. Osino's management team is fantastic. Osisco Development's another one. Both of those development projects, they're going fast and furious, right? GoGold's another one that's fast and furious on developing Los Ricos South. All 3 of those look great. Agnico Eagle, absolutely love that one, especially as a dividend stock. But it's really only a 2 to 3 bagger. It's kind of a diversification play for you. Income, this is the only one that you're really doing diversification. Everything else is kind of a big upside. Love Minera Alamos. Love First Majestic. Silver Tiger definitely has risk. Definitely has upside. It's kind of a it's cheap. It should work, but there's your highest risk stock in this is Silver Tiger. That's the highest risk. Silvercrest, slam dunk, of course. GoGold, I think I just mentioned Los Ricos South. They're going to be building that. Calibre looks solid to me. Osino looks solid. Everything looks really solid except for the 2 that stick out to me here is Liberty Gold. It just risk, and Silver Tiger risk, and then Agnico Eagle is basically you're not going to get the returns that the other stocks are going to get. It's kind of a diversification play for your portfolio. Plus, it's going to return dividends. I have a big position in Agnico Eagle because they bought Kirkland Lake, who bought Newmarket. So I have a big position, but I have it for diversification. I have it for dividends. I don't have it for upside. But on the whole, looks great. So what you're missing here, you're missing AYA. AYA, it really stands out. Who else are you missing? You're missing I-80. You're missing Equinox. Who else stands out? You're missing Hecla.
I own Hecla.
You're missing GCM. Okay, you own Hecla. You're missing GCM. GCM looks great. Okay, so GCM, I-80, Equinox. Those would be my 4 big plays that you're missing.
Thank you. I appreciate that, especially because I'm looking at Liberty Gold and I was thinking about buying more because it's sold down. But you give me some good perspective, so I actually appreciate it for that alone.
All right. Excellent.
You got to keep that for the brand, though, Liberty, right? You got to keep some.
And it's like I was saying, man, I got to
Oh,
make
I
my
missed.
own Rick
Oh,
Roll Paladin
I
story.
missed. I missed one. The other one you're missing is U.S. Gold. Love that stock.
Hey, Don, what's your opinion on the over-the-counters? Because I actually kind of prefer the over-the-counters, especially if it's a name like Silver Tiger, because you can catch those stink bids real easy. It's obviously less liquid. I like that. I've actually caught a few fish that way. What's your opinion on it?
Okay, so for OTC, there's 4 different buckets that an OT stock can trade in. It can trade in the grays, it can trade in the pinks, it can trade in the QCs and the QXs, QBs and QXs. You do not want to buy OTC stocks that trade in the grays or pinks. If they trade in the QB or QX, they're fine. Most of them are fine, but I would avoid the grays and the pinks. The grays and pinks, then buy them on, use interactive brokers and buy them on the native exchanges, Canada, London, Australia. But yeah, avoid the pinks and the grays. Just not enough liquidity. Plus, if they're in the pinks and the grays, that means the company itself is not supporting it. And so they can get delisted, they can stop trading, it can be a big mess. But yeah, I don't have a problem with the QBs and QXs. Does everybody know how to find out what it's trading at? I should tell everybody?
Yes, sir.
So you just go to otcmarkets.com and put in the symbol, and it'll tell you. It'll be right on that page. It'll tell you exactly how it trades. Gray, pink, OTC, QX, QB. The QXQB basically means that the company is reporting their financials.
Don, as a follow-up from our prior interview, one of the questions that I got people asking me, a lot actually, a gentleman had asked you how you would invest $1 million, if you remember.
Okay.
And your answer was, well, first, if I didn't have any physical, I'd get my physical. And you said, well, once you reach your number, then you move on. And the question I was asked most, well, how do you figure out what your number is?
Exactly. So everybody's going to have a different number, first of all. For instance, Larry Lepard, that guy, I can't believe how high his physical silver number is. Like, wow, you went that high, you didn't stop? Jeez. There's no way I would want to.
Sorry, I'm sorry. I think that was me that muted everyone. It's right next to the microphone button. Sorry.
Yeah, I was wondering how it got muted. Okay, let's go back. Let's answer this question again. So your number on physical silver, it's going to be your personal feeling. You got to decide how much you need to own. Certain guys, I mean, I can't believe how high their number is. It blows my mind. It's like, you own that much physical silver? I mean, why? What's the point? You know what I mean? I think they're just way over the line. Because, it's like, how much do you know? It's basically, it's your personal feeling. Me, I mean, once I got to a certain level, it's like, I don't need any more physical silver. That's enough. So now what I do is I just buy a few coins. I basically collect mainly sovereign coins. Because I like the way they look. So I own a bunch of them. So every year I buy 2 or 3. Like I bought a 2-ounce Libertad, the Mexican Libertad, because I didn't own a 2-ounce. I overpaid for it because I don't own one. It's more of a collector. There's a sovereign British Robin Hood that I didn't know existed, and Maid Marian. I almost bought them, but they were so darn pricey. I didn't. I just like, but I would like to own them. But I like the pandas in China. I like the elephants in Africa. Of course, I like the maples, and I like a lot of the Australian coins, the koalas, and the pandas. The pandas are actually in China. The kangaroos. I like a lot of the sovereigns, the eagles. They're new eagle. So I kind of collect the coins. But as far as stacking bars and stacking ounces, you have to. I think everybody should try to do 1,000 ounces. And then once you get to 1,000, you have to decide, is that enough? Now for me, no, that wasn't enough. I had to keep going. So you basically get that number and you just you keep going, and then until you basically hit your number and think you have enough. But
Don,
I think 1,000 is a really good starting point.
Don, could I ask you this? How about 1,000 for the husband and 1,000 for the wife? How do you feel about that?
It's your gut. It's basically your gut. Do it. Do 1,000 for each, and then see if that feels right. See if that's enough. If you feel, because is that enough, or or do we keep going? And that's basically how I feel. It's your gut feeling. You'll know if it's enough. You'll know. It's like, okay, I know how much I have. Is that enough? Do I buy more? Do I buy another bar? Do I stop? But yeah, I basically hit my number. I stop stacking. It's like, that's enough.
James, we'll get you up 1 second. Don, did you see there was a gentleman on YouTube who set out to see what the numbers were in terms of ownership? And in other words, if you owned 100 ounces of silver, does that put you in the top 90%, the top 10%?
Yeah.
You saw that? And so it's
Yeah.
only 50 ounces, only 50 ounces of silver to be, I think, in the top 20%. But gold was incredible. It was more like 15, 20 ounces to be in the top 20.
Yeah. That's because more people basically have gold as a hedge and as an asset. The big money people, the 1% crowd, they own some gold. They don't own any silver, and that's the reason why. So he did a decent job. He didn't do a great job. My issue with that is he's using sales or stuff like that and quantity. I don't know exactly how he did it, but for me, I consider somebody a stacker who basically does it proactively. I think that he was doing it in terms of what people actually own or have. They weren't really stackers. They just happened to have, some silver around the house kind of thing. You know what I mean? They have it by accident. They're not really stackers. So so when you get into kind of the 1% crowd or whatever, how many people are actually proactively stacking silver? And I don't think it really counts unless you get to 100 ounces. I would ignore anything below 100 ounces. Is kind of they just happen to own some, right? So how many people have 100 ounces or more? I'd like to know what the percentage of that is. It's not that many. The number. And then if you exclude India is crazy. First of all, India has over 1 billion people, and it's natural for them to stack silver and gold. Once you're married, most families have they have gold, and a lot of them have silver. I don't know if you guys know this, but somebody tweeted a week ago that the first 8 months of this year, India imported 200 million ounces. That's 20% of annual supply. And all of that is retail. That's all Indians just stacking silver. So if we exclude India and we look at how many people have stacked more than 100 ounces proactively, I think it's way less than 1% of the global population.
Yeah, the first 100-ounce silver bar is always a special one. James, go ahead.
Yeah, no, I was just going to say, surely when you're thinking about how much to stack in precious metals, is it not about if there's a kind of financial system failure, how much metal do you need to tide you over for? You got to pick a time, but 2 years or something like that, and work backwards from that. Is that the logic really about why people? I know it's an investment just of itself as well, but that's how I'd be looking at it.
Yeah. It's basically exactly what you said. It's like there's a financial crisis crash, and your dollars don't work anymore. Your credit cards don't work anymore. And so you have it's basically a backup plan. You want some physical metal. So if you have 1,000 ounces, I think if under that scenario, silver is going to be worth at least $100. So if you have 1,000 ounces, that's $100,000. So I think $100,000 should be able to get you through a couple years, right?
Yeah, got you done. Yeah.
That's why I said 1,000 minimum.
Yeah, I was thinking $20, and of course I was being way too conservative. Yeah, right.
Yeah.
Yeah.
That's the reason why I stopped stacking, because I basically put the number on and said, that's it. That'll be enough to tide me over. I don't need more than that.
Yeah, right. Yeah.
I have another question coming in. Somebody sent it online. It's Wesdome Mines.
Right.
I don't know what that one is.
They want me to talk about Wesdome Mines?
Correct.
Okay, so Wesdome is currently having some issues, and it surprised me because until the last 2 quarters, Wesdome has basically been generating a lot of free cash flow. They had their cost under control, and simultaneous to that, they've been adding ounces and adding very high grade ounces. So up until the last 2 quarters, it looked like a really solid hold. You know, they weren't having any problems. Eventually, they were going to get re-rated higher as that high-grade gold worked its way into increased production. But now, the last 2 quarters, their financials have been, not pretty, basically. So I rarely sell stocks. But I bought Wesdome very cheap. I bought it like, I think, less than $1, and it was way up. You can see that it's completely crashed. And I actually sold it because they were having problems. So it's down from $16 Canadian down to, let me look at it in US dollars. So if we look at it 1 year, so it was trading, in March of this year, it was trading at $12.78 US, and now it's trading at $5.83. So that's more than a 50% drop. And so you can see, if you look at the chart, a lot of the reason why it hasn't held up is because it's had a few bad financial. Yeah, the price of gold has dropped, but this is a company that's been having these incredible drill holes. So you would think it would have held up better. So I actually got out because I was up. Like I said, I got in less than $1 a share, and they had a couple bad quarters. I think I sold around 10. And I decided that it's the market cap is almost $1 billion. I think it's come off. It's like, I just didn't see, I didn't like the fact that, something was, why are their costs going up? So, I mean, inflation, absolutely. But it was already a pricey stock, and I was up big, and I just thought, I was losing a lot of confidence in, the upside. It's already almost $1 billion company. How much upside is in this company, is in this stock? And so I decided to get out. Let me see what I have here for the upside now that it's crashed all the way down. So it's crashed 50%, and it's still only right now printing as a 2-bagger at $2,500 gold. That's as a 200,000 ounce producer. So the upside today, even after crashing more than 50%, is still less than a 3-bagger. So I had to sell because it just didn't have that upside, and I had a whole bunch of profit in it, and it started to turn south. So I don't like to sell companies. I hate to sell stocks, but Wesdome is one of those ones that, it's still pricey. It's at $850 million. It was already back in before the gold price, before the markets really started turning. This stock was valued at $1.5 billion in November of last year. $1.5 billion. That's a pricey stock for a 170,000 ounce producer. So I was riding it, but I'm like, I wrote it all the way to the top. I just had to take my profits. It just didn't. The upside just isn't there, and it's a pricey stock. I wouldn't buy it unless it crashes down to say 500 million. Excuse me.
Hey Don, I wanted to get your feel on what the supply situation looks like this year. So I think it was 2015, 2016, we kind of peaked with mine supply. It's been dropping ever since. The Silver Institute, they say we're going to add about 21 million ounces this year, which is about 5% year over year. I'm far from the foremost expert on this, but I just kind of look at the projects coming online, kind of look at what's happening in copper and zinc coming online. I just don't really see it. Maybe part two to that question. The recycling side of it, they also, I know it's kind of an opaque market, or at least I've found it tricky to get great hard data on it. But the Silver Institute says about 7%, so 180 million ounces this year. With the price dropping this hard, with the fuel costs rising, it's a very energy intensive process. It seems like there's no way in heck we're going to get to 180 million ounces or 7%. It's like, do you have any feel for on either of those on the supply side, if that's realistic growth, or if we're going to come in under that?
Well, I'm somewhat outspoken, if you will, on the mine supply, on silver mine supply. I'm not somebody. I'm a silver bug, first of all, and so I'm not somebody who's somewhat conservative, if you will, about mine supply. In my book, in the first chapter, my first chapter is on silver. I basically say that there's not enough silver and we're going to have a shortage. And my feeling, and this is one of my problems with a lot of the guys that do the research on silver, the guys that write these, you mentioned the Mining Institute, is they don't tell us what the 1,000-ounce bar inventory is above ground that's for sale. And my feeling is that it's very low. I don't think if somebody right now tried to start an ETF and basically said, I want 100 million ounces of silver and send me the pallets of these 1,000-ounce bars of silver, I don't think they could get 100 million ounces. I really don't. I do not think that there's 100 million ounces of silver inventory above ground. I think it's more like 10 or 20. And so I think what's happening right now is that the silver is basically coming out of the ground and going to the manufacturers, and nobody has inventory, and there's very little inventory, and that we're going to have a shortage here because there's just not enough silver inventory above ground. And the reason why is because the ETFs have sucked it all up. It's all sitting in warehouses, but it's owned by these ETFs. SLV and PSLV are the two big ones, but there's like 5 of them, some of the smaller ones. And so the silver inventory is above ground. It's not for sale per se. And so I think, I agree with you. They can say the supply is 1 billion ounces, but in actuality, that they're really talking, when they talk about supply, they're not really talking about, what is the current, I asked these guys, what is the current above ground supply for 1,000-ounce bars? They don't know. So it's not 1 billion ounces, right? It's not even, it's not, 1 billion ounces, which is the annual supply. They basically take the annual supply and they take it over 12 months. They should say, what is the monthly supply? What's this month's supply? And then what's the monthly inventory? But they can't do that because they don't know. So I think that sometime between, let's say, $35 ounce silver and $50 ounce silver, I think we're going to see a shortage. Because I think the retail crowd is just going to soak it all up, and they're going to basically wipe out the retail inventory. All of your websites aren't going to have any inventory. AppMex is going to be out. JM Bullion is going to be out. They're all going to be out. They're going to wipe out their inventory, and then it's going to take them 6 months to rebuild it. Simultaneous to that, I think the wholesale inventory is going to get wiped out too. And then you're going to have a shortage. And how we're going to know there's a shortage is not on the retail side. It's going to be on the wholesale side because, Apple is going to say we have to shut down our plant because we can't get any silver. And it probably won't be Apple himself. It'll be one of the Apple suppliers, right? One of the Apple suppliers won't be able to get the silver to make the, the boards or whatever they need for the phones. Or it'll be an auto manufacturer, one of the auto manufacturers will shut down a line because they can't get, a chip that needs silver or something like that. But I think between 35 and 50, we're going to see a shortage. And, it's not about the billion ounce annual supply. It's about the monthly supply, in my opinion.
Gotcha. I fully agree with that. Maybe a question and a comment. The question on the mine supply, like, do you see the projects coming online to get us like another 21 million ounces or whatever they say it is? Or would you, if you had to guess, would you say we're going to stagnate from 2021 or continue that decline that's really happened from 2015 on that one? So let's leave it as a question.
All right. I actually think it's irrelevant if supply grows. If it grows by 20 million ounces, so what? India will soak it up in a second. The retail crowd will soak it up in a second. So the key here is it's not going to grow enough to make any difference. I'll just give you a short answer because I'm cutting to the chase and telling you it really doesn't matter. And so what's your comment?
Oh yeah, the comment I completely spaced on that one. Yeah.
Okay. But my answer makes sense, right? The supply really is irrelevant.
If I can chime in on the futures side a little bit, the futures are not very exciting in terms of open interest right now. They're well under 150,000 contracts of open interest on all the contracts of silver. It's kind of like it'll wake up over $28, $30, over $35. We'll probably on our way to test that $50 high that was made twice in history. But right now, to support what Don's opinion seems to be, we'll have more selling when silver goes over $28 or $30 because there's been people taking delivery all year long. They're all behind. Every one of the people that's taken delivery this year is behind on silver. Not everyone, not 90% of the people are behind because you look at a chart. All we've done has gone down since February, March. But getting over $28 or $30, some of those people, they'll be ahead $4 or $5 and they'll throw in the towel. They say, I was down 6 and now I'm up 5. I'm out. But we will have a lot more buyers over $30, $32, $33. Retail buyers, they'll be buying all the way up. But the wholesale people, as Don says, we get to $38, $39, something like that. And some of the companies that use it, the industrial users, they'll be laying in pallets.
Oh, yeah, and that reminds me of the comment that goes well with that, actually. Space for a second there. When you said Apple, like, this is a theory I've had. I think Keith Neumeyer's mentioned a couple times, probably where I got it, honestly. It seems like this silver supply situation is going to be so bad. Maybe not next year, but probably sometime in the 2020s. Like, I think the companies that do a lot of the M&A and buy a lot of these juniors off us are going to be Apple and Tesla and Samsung. I think they're going to start buying mines and refineries to secure their silver and nickel supply because, like, to them, a lot of these silver companies are petty cash. Like, they're going to snap them up just to guarantee it. Like, why would they risk paying $80 in the futures market when they can just buy one for $1 billion, right?
Austin, I'm going to disagree with that. I'm going to say, in my opinion, that we start trading over $30, $32. These silver companies, especially these pure plays, they're not going to be for sale. There's going to be some acquisitions, between now and $30. Some companies are going to buy some other companies, something like that, but they won't be for sale.
Apple's got a lot of money.
They'll find a mine. I think one of the South Korean companies actually did a deal with Osino, I believe. Is that right?
Oh, I don't know.
Yeah, I think so. They basically did a direct deal, so Osino would sell them their silver directly.
Those companies that you're talking about, they can long hedge. They can call a futures broker and say, I need coverage of 30,000 ounces or 60,000 ounces, whatever they need. And they can long hedge that. Hedge is just a substitute buy or a substitute sell.
Well,
Our margin.
Yeah, absolutely. You're right. I think the silver market is going to close on COMEX. I think once we go into the type of shortage that I'm expecting, once they can't get it. So once your wholesale market dries up, they won't have enough silver to run a futures market. They just won't have enough. I don't know when it will close. It might not close until the second half of this decade, but I'm expecting it to close. I think things are going to get really wonky. I think they're going to eventually have to. The COMEX will close first, and then they'll release silver from the ETFs. They'll force the ETFs to release the silver after the COMEX closes, because the COMEX, they won't have enough silver to do a futures. They're just going to run out. It's going to shrink to nothing. That's my expectations. Once it gets down to like 100 million ounces, they can't run that exchange anymore. Well, I mean, they can't run the silver exchange. So I think I really expect the COMEX to close shortly after the shortages begin. So they won't be able to hedge. And that's when silver is going to go really wonky. That's when you get $300, $400 silver prices. But then I think the silver price is going to crash back down when they make the ETFs illegal and make, SLV basically dump all their silver onto the market.
One can dream. One can dream. That would be really nice.
Yeah.
So, Don, do you have any time requirements? I know that we've actually gone 2.5 hours, so we really, really appreciate your time. I don't know if anyone else has questions they'd like to jump in with.
I'm going by how much battery life I have on my phone. Right now, it's looking like I can go 30 more minutes. So, any more questions? Unless we run out of questions.
Yeah, I'd like to pivot a little bit, because the last time you were on, you made a lot of great calls. All right. And so I would like to see how you see things now. A lot's happened in the last 9 weeks. 9 weeks is like an eternity in this world right now.
Okay. You want me to make the calls of what's going to happen in the next 6-12 months?
Well, let's start with, say, the dollar. The last time you were on, the DXY was at 106. You thought we'd at least make it to 115. We're effectively there at 113. To me, it feels pretty top heavy, but that doesn't mean it can't go higher. Curious your opinion if we've reached your target, or if anything has changed. You think it might go higher?
I think 115 is the top. I think that we'll see intervention above 115. I think everything starts to break. I could be wrong. It might go to 120 because Japan refuses to raise the rates. Japan's at 0.25. Can you believe it? They're at 0.25 right now in their 10-year, and it's basically locked. It's frozen. And Europe is at 0.75. They're not even at 1%. 0.75. But Japan, now they say that they want to. They've actually starting to support the yen. The rumor is they don't want it to go above 145. 145 is the line in the sand. So as I said, 115, everything starts to break here. 115, the yen goes above 145. So I think we're going to roll over here before we get to 115. But and the key here is like 106. So once it goes below 106, I think that's it for the dollar. And then we basically crash back down. Once it gets below 106, I think we trend under 100. Once we trend under 100, I think it's going to be nonstop. I don't know what's going to happen. But basically, the only way that the dollar crashes that hard is that the U.S. economy basically, throws up. I don't expect a crash in the U.S. economy, but I think that the financial system, is going to somewhat freeze up where, banks we're going to see some bankruptcies. We're going to see basically banks not making any loans, people having trouble getting, interest rates going higher for like car loans and houses, and, things really getting kind of wonky. I don't know the whole scenario, but I do expect the dollar to fall substantially next year. I think it could go all the way down to below 95 is my expectation. I won't say below 90, but I'll say below 95 by the end of 2023. So basically, until and it's all going to start once we get below 106. So if the longer the dollar can stay over 106, it's going to be strong. So the gold, I think gold will start running, say get above 1900 once we get below 106. Above 106, I think gold stays below 1900. So it's going to be, it's kind of hard to predict what's going to happen here. Although I think a recession is inevitable. I talked earlier about what I thought interest rates are going to do. I'm at the Fed. I think the Fed funds will not go to 4. I think it'll go to about 3.75 after the next raise. 0.5, 50 basis points will take it to 3.75. I think that's it. And then we start seeing mass layoffs. GDP starts falling. Things get really ugly. And next year, I think 2023 is the beginning of a really nasty period for America. Kind of the end of America, really. Transition into kind of a new era, if you will. Easy Street, I think Easy Street's coming to an end right now as we speak. I think we have about, I don't know, maybe this will be the last Christmas of kind of normalcy. I think it will be. I'm predicting this is the last Christmas of normalcy. America's not going to be normal anymore. I don't know what the new normal is going to be, but it's going to be really weird, really wonky. But yeah, I mean, hold on to your seats, because if you thought that 2022 was weird and wonky, I think it's going to get even weirder once we go to 2023, because America has been the global dominant economy, the global dominant military, the global dominant, everything, right? I think that all ends next year, 2023. It's going to be a strange thing. I think that China and Russia and the BRICS are going to release a new currency next year, which is going to hurt the dollar. That's one of the things. I said we need something to push the dollar down. I think that's probably going to be it. It's going to be this new currency. So these other countries that are currently trading in the dollar are going to trade in this new currency, and they're going to start dumping treasuries. I expect Japan and China to both dump treasuries starting now. Japan to do it to defend their yen. Basically, they're going to sell dollars and buy yen, right? China, I think they're going to do the same thing. I think they're going to sell dollars to buy yuan, support the yuan. Yeah, so that's kind of my overview there.
Yes, you actually had predicted that on the last show, and this has been playing out in spades. You actually had targets for China itself getting down to about 700 billion in treasuries, which I know they're under $1 trillion now, and so we're well on the way. Don, could I ask? I got a couple of follow-up questions for everything you just said right there.
All right.
Could you explain to people, because I want people to understand this, all right, the significance of the Bank of Japan destroying their currency to save their bond market and how that affects us?
That's a really difficult question, but I'm gonna take a shot at it. So Japan is a mercantilistic economy, unlike us. So they've had the luxury of having a somewhat strong currency because they've run trade surpluses. We're trying to do the same thing, but we're not a mercantilist economy. But we have the reserve currency, so it's a kind of a different dynamic for them. So they've been able to print like crazy and not get inflation. And like right now, they are getting inflation. A lot of it is like energy inflation as oil prices go up, but they're not having as high as we are having. So they're not having. They're still able to somewhat maintain it. But what's happening is their currency right now is getting really, really weak, which helps them somewhat as a mercantilistic economy because their goods are now cheaper. Like right now, their cars, their autos, they're actually, the prices stay the same. They're getting more profit per car. So, their economy, this is one of the things. I think that the yen is actually going to snap back pretty hard, pretty fast against the dollar for these reasons. I think, it's going up high. I think it's going to snap back. Maybe it's like over 140 right now. I think it's going to snap back next year back to 1 120s. It's my expectation. The one thing, Japan still is the mercantilistic economy, which helps them immensely, their standard of living. They also, their demographics, they're growing at a very slow pace. So they don't have a lot of cost involved. They don't have any immigration, for instance. They don't have those problems. They don't have a poverty problem. It's an advanced country, advanced economy. So they can muddle along, if you will. They're in a better position than we are to kind of get through this decade. We're going to hit the brunt of this because our demographics are actually very ugly. So for us to maintain our standard of living is going to be impossible, in my opinion. Our standard of living is going to drop, and there's nothing we can do about it. We're going to have a lot of stagflation. They'll have some, but it won't be as bad as ours. So, they've been able to get away with this MMT, with this high printing, but they're breaking their bond market because they own all their bonds. They're breaking their financial system. They're breaking their free markets. I don't know how that's all gonna unfold in Japan, but by and large, I'm more bullish on Japan than I are in the U.S. because the U.S. has a problem with their standard of living. We've been propping it up with debt. Japan has a big debt problem, but they don't have a big debt problem with their households like the U.S. does. We have a lot of household debt here, much more than Japan does. And so they don't have that problem. But the U.S.'s problem is there's more dollars foreign right now in foreign countries than there are in the U.S., which is kind of crazy, right? Because of the euro dollar. And the reason why is because foreign banks have made loans in dollars. And when they make loans in dollars, they've actually been creating dollars internationally, over the last, 20, 30 years. So there's more dollars floating around in international markets. Well, guess what? A lot of that money is going to come flooding back into the U.S. So what is that going to do? It's going to create inflation. All those extra dollars floating into the United States. How are they going to deal with that? I think that we're going to see some really weird things this decade. I think that we're going to actually see potentially a new U.S. dollar currency, potentially a new foreign dollar currency. They're going to try to prevent all those dollars from flooding back into the U.S. I think the U.S. government is eventually going to do a semi-default on our bonds. They won't default 100%, but they'll give a haircut. They'll default like 25, 30% is my expectation. We're going to see some really weird things. That's all I can say.
Okay, so the last time you were on, we'll stay on this train of thought. We talked about the CBDC. We largely talked about it in regards to the elements of power and control that it could offer the governments, right? We talked about it more like that. Let me follow up with you this way, more on the aspect of timing. I'm not sure it's a coincidence that the Biden administration, they're very openly talking about the CBDC. China's already been test driving their own digital currency. I think it's the electronic Chinese yuan. They're actually expanding this week. I saw an article. They're moving it into their largest province. So it kind of does feel like there's a digital arms race going on. So do you think there's anything significant in terms of the timing of all of this? Why now with all this big push on the digital currency?
Well, this is a can of worms to answer this question. I think that the U.S. government is not being transparent with its people. And by and large, I think that it's kind of a slippery slope. Once governments kind of get the taste of socialism, once you basically take away freedom, socialism and freedom basically do not go hand in hand. And the U.S. government has been, especially the last 20 years, and especially the last 10 years, has been going down this slippery slope of the government obtaining more and more power. I mean, COVID was a good example. I mean, Biden he really wanted to implement things that were very questionable versus the Constitution, right? The Supreme Court shut him down on a lot of these things he wanted to do. Well, that's kind of like that slippery slope where the government decides what they think is best for America, and that everybody has to kind of abide by this. And what happens is that you get these basically power brokers in Washington making decisions for everybody. And when in order for it's basically a collectivist type of society that's where you end up. You end up with a kind of a collectivist where what the government does is what's good for the whole. We think what's good for the whole. Well, that ends up basically taking away what's good for the individual. So what's good for the individual is freedom, and you're seeing government more and more attacking people that are individualist. They basically attack libertarians, attacking people who think for themselves, people that have opinions that go counter to the government, right? This is the big shift in America right now. Well, China went down this path in spades, right? That's why China, the social count and number system. They're the first country that's wants to do with the digital currencies. And why, right? It's because they want to control the people. They want the complete opposite of freedom. And isn't it scary that now a lot of these socialist countries, Europe, Canada, Australia, United States, are going down the similar path where they want to use these digital currencies. Why? They say that they want to make sure that people aren't like terrorists or spending money to buy weapons or whatever. That's not really what it's about. It's really more about control of the people to give them more power so that they can implement a collectivist type society. I think the end result is kind of what WEF wants to do. They want to create a collectivist society so that a small number of people can kind of dictate what is good for the whole, because people don't think it's fair. Like capitalism isn't fair, right? It's the best economic system, but it's not necessarily fair because the people that succeed are kind of the smartest people in the room kind of thing. I mean, if you look at the people that started, like a lot of these companies, the tech companies, starting with Steve Jobs with Apple and Bill Gates with Microsoft. And it's like the smartest guys in the room make all the money, and people don't like that. And the people that go to work for these companies are kind of the smartest people in the room. And it becomes kind of an inequality, inequity type of civilization. And so we're going down this path of collectivism because once you get people thinking in terms of the only way that we can create equity is through decision making on a national level, you're really going down a really dangerous slope. And so that's kind of where that's the alignment. You said, is it all kind of related? That's the reason why China's first to do this. It's kind of obvious, right? And that's the reason why you're seeing it kind of starting in these socialist countries. They want to do these type of currencies first. And it's a very dangerous thing because they can literally just turn off your wallet. They basically own your money now. You don't own your wallet, because once it's a digital currency, it's all in, you can't hide it from them, basically. There's a wallet and they have access to your wallet. You can't hide your wallet. That's what CBDC is all about, is basically exposing your digital finances and giving them the power to basically confiscate or turn it off. It's a very dangerous thing in terms of freedom. Is that really where America's heading? I actually just wrote a book called Conservatives versus Liberals. Why? What's the subtitle? It's called America's Political Cold War, America's Conservatives versus Liberals, Why Neither Side Will Win. And I expose both parties because both parties will not admit their weaknesses. And that's the reason why we're in such trouble. That's the reason why we don't have any answers. And that's the reason why people basically hate each other, because nobody really has the answers, because nobody's looking at it from the right angle. So that's why I wrote the book, to kind of expose both parties, and I kind of expose the collectivism. I don't think I mentioned CBDCs in the book. I might, but it's kind of the same. It's a dangerous path, put it that way.
right? And it is interesting, all of that you say about the control. Klaus Schwab's World Economic Forum recently had an article just a few days ago, and they actually described the lockdowns as a successful experiment on compliance, which was an interesting thing to say. But I'd like to follow up, stay on the politics a smidge, because we have a lot of elections going on, right? Both domestic and abroad. A lot of them are pretty big. So especially the foreign ones, right? Like in Italy, Giorgia Meloni, very right wing, a complete change from what they've got. Do you see things like this impacting outcomes, you might say, or political attitudes? Is this a reflection of a change of the populace in the way they feel? I mean, obviously, this is a bit major change in the terms of the election. She hasn't locked it in yet, but it looks like it's going that way. Do you feel like this is a sign of change out there that might offer some?
So I've actually been writing about this since I think I wrote my first book in 1990, and it's all kind of coming to a head now, politically everywhere. So where our political system, every political system in the world is basically failing. And so we're going to go into a change, and everybody is going to start to pull away from all political systems because everybody knows they don't work, because no political system, there's no political party in the world today that's basically offering what people want. So it really, and everybody thinks that it's impossible, to create a political system that works, but it's definitely doable. And it's basically what it all comes down to is awareness. So I've been waiting for basically the truth to be released. But what it really comes down to is human nature. And this is where politics fails. And so what is human nature? Every human on the planet wants to love other people and to be loved. It's all basically the core of the human being is love. They can say they don't, but that's what it comes down to. So that love and freedom basically go hand in hand. So they want to be loved. So they want to be loved by their governments. So if they're going to be loved by their governments, they have to be given freedom. If you're not given freedom, you're not basically being loved. And so if you're not being loved, then you're basically going to rebel against it. And so neither party are recognizing human nature. Each person basically has a soul, if you will, and that soul is free and knows it's free. We all inherently know that we're free. These are kind of inalienable rights that kind of our founders kind of understood. That's why America was basically based on freedom, because they basically recognized that the human soul demands freedom. So if you don't give people, like in America, we say that we're the land of the free. But if you are not giving the opportunity to be free, then you're not free, you're enslaved. So if people are basically working, 40, 60 hours a week, and they have no free time, and every penny that they have goes, going towards work, that's not freedom, right? And so you have to give people freedom, and you have to let them know that they feel loved. They have to give them the opportunity to love others. But it really comes down to the right to be free. So if you don't provide freedom, the key to it all is basically freedom. Everybody has to be free. But in order to feel free, you have to feel it. Everybody has to feel it. You can't just say that people are free. They have to feel free. So how do you do that? We haven't tried it. Nobody's actually tried to create a constitution. I actually wrote a constitution. You have to create a constitution that provides freedom, but everybody has to feel free. How do you do that? Well, you can't have a big overriding government, because you won't feel free from a government. If a government is telling you what to do, you're not going to feel free. You're going to feel controlled. So you can't feel controlled. Right now, people feel controlled. They feel enslaved. That's what has to shift. And what's going to happen? It's going to start in this decade. And it's probably going to start in the prosperous countries first, like America and Europe, is people are just going to pull away from cities. They're going to basically just pull away from society. And they're going to create these communities where they feel free. That's the natural human order. That's the natural way that humans feel. They're going to love each other and feel loved. feel free. That is the core of human nature. That is our new nature. So if that's our human nature, that is the kind of society we have to build.
I love it. Let's stay on this arena a little bit longer. I had some things I wanted to talk to you about, especially as it relates to geopolitics, Russia and Ukraine. So we spoke about this last time. So in the last 9 weeks, has this war evolved in the way you might have thought it would? Has it gone astray? I mean, it looks like Russia's going to get this referendum and an annex on parts of Ukraine, which incidentally, I learned today, if they did that, they're going to lose about 100,000 square kilometers of territory. Ukraine, as it stands today, is the second largest landmass in Europe. It would make France the second largest. So anyway, it's significant. And to follow up with that, Putin said something recently that was very interesting. He said, under the cloud of inflation, many nations are asking a good question. Why exchange goods for dollars and euros that are losing value before our eyes? The conclusion suggests itself. The economy of mythical entities is inevitably being replaced by the economy of real values and assets. And I say this to people. If I didn't tell you Putin said that, and I asked you who said it, I mean, it might have been described to, someone like yourself or Peter Schiff or someone like that.
Right. Yeah. Putin is a really smart dude. So first of all, everything that's happened in Ukraine has happened exactly as I expected. Everybody was saying that, Putin, this whole thing is about Russian expansion, right? They're going to start in Ukraine and they're going to do Moldova and they're going to do the Baltics. He's going to keep expanding. But that's all just to make everybody, to support basically the Ukrainians, right? It's all, it's basically all propaganda to get everybody to go against Russia. But the point of fact is Putin, if you read Brzezinski's book, if you think in terms of Russia's allies, the only allies that Russia has is Belarus and Ukraine. That's it. Those two countries. That's all they have. They could not afford to lose Ukraine. And if you think about it, if you go back when the USSR was created, they actually created Ukraine. Ukraine was created by Russia. That didn't exist prior to 1945. That was actually part of Russia, and they made it part of Ukraine, which is, that's the reason why Putin, he thinks in terms of what it was prior to 1945. He thinks of Ukraine as basically being part of Russia, and he also thinks in terms of protecting Russia. What he needs is defense because the U.S. has been so aggressive on expanding NATO. So I never thought in terms of this war as being Russia expansion. I've always thought of it in terms of basically Russia's self-interest as self-defense, that they were going to take. I didn't know if they were going to take eastern Ukraine, but I always thought that what they were going to do is turn it back into an ally. But now what it looks like that they've recognized that they can't turn it into an ally. So if they would have took over Kiev, I think that they would have basically they would have kept Crimea probably, and they would have allowed Ukraine to be a puppet government, the whole country. But once they couldn't get Kiev, they basically decided a new tactic that they were going to take over the Russian populated areas in the east. And I think now that is basically, I think it's pretty obvious that's their goal, that they basically want to take over the eastern provinces, Donbass, and they want to keep Crimea. And then they're going to be basically enemies of Ukraine. And then over time, they'll probably try, it might take 20 years, to be allies with Ukraine again. But right now, they've killed so many Ukrainians, it's going to take at least 20 years before they're allies again, right? But it looks like that Putin is dead serious on taking over the east. So now it's just, we have two choices, right? We either negotiate with Russia and give them the east, or we fight, that the West basically continues to supply Ukraine, and Ukraine continues to try to kick Putin out of eastern Ukraine, and the war goes on for years and years or whatever. I think that they'll negotiate. Who knows? It could be next month. It could be in 3 months. It could be in 6 months. But I think Zelensky at a certain point is going to decide. Okay, we'll give you the provinces when you can keep Crimea. I think right now it looks inevitable that Zelensky has to give in, unless somehow, Putin, he get kicked out of office, and maybe the Russians basically back down and leave. But as of now, I would bet that the eastern provinces become part of Russia.
I actually completely agree with you. That's been my take for a time too. It's actually one of the first videos I published on my YouTube channel, and I had that outcome as well. So very interesting. Tell you what, do you have time to have a little Bitcoin segment?
Oh, absolutely. My battery looks like we're still going good. Go ahead.
All right. So I saw you recently quote Peter Schiff. All right. And you said, Peter, you don't get it. When are you going to give up? The value is on the network. So I want you, I'm open-minded. Okay. I actually don't think that the network has any value, but I'm going to give you an opportunity to convince me why it does. And here's the way I see it. Let's say the last Bitcoin were mined tomorrow.
Right.
All right. What incentive do the miners have to maintain the network if there's no Bitcoin and nobody actually uses the network to do really any relative meaningful transactions in volume?
Okay, so the reason why the miners are irrelevant is because of the value of the network itself. So first of all, it's going to take 100 years to mine all the Bitcoin. So in order for Bitcoin, well, the way that the halving works, it's every 4 years. So if you look at the supply of Bitcoin, once you get to like 2020, the next two halvings are 2024 and 2028. So once we get to 2028, I think that the value of the network could be well over $1 trillion. I'll be shocked if it's not. So currently it's like, I think, like $500 billion. I look at Bitcoin, the overall market cap of Bitcoin as being the value of the network, not the value of Bitcoin, the value of the network. Bitcoin gets its value from the network itself. So if right now I own Bitcoins, I can basically send those to anybody. I can be anywhere in the world. All I need is an internet transaction, and I can send those Bitcoins to somebody. Anywhere. I just need an internet connection, right? So my Bitcoins are worthless without the network. It's the network that gives it value, and the network is always up. As long as the internet's working, the Bitcoin network is up. Now the miners themselves, as the value gets over $1 trillion, all you need is people that own a chunk of it to basically support it. So you don't need a lot of miners. Basically right now we have all those miners. There's a lot of them. There's over 1 million miners out there. I'm talking about computers, right? A lot of them, they're all basically grouped together. So you take 1 million and group them into tens of thousands, right? So as I think that the mining network will basically stay intact at least through the end of the decade. In other words, there'll be enough money to be made through mining through the end of this decade. But once you get into the next decade, as the value, because there's going to be fewer and fewer Bitcoins mined. Once you get to 2032, there's not a lot of them. I think it's like 100 a day, Bitcoins a day will be mined. And then it goes to 50 and 20. It goes down to 50 in 2036, I think. So as we get into the next decade, the number of miners will start to decrease. But all you need is people that own a chunk of it. They just can buy some miners. It's not that pricey, 10,000 miners. You don't need that many. It's not as if somebody is going to take over 51% of the network. That's where you run into trouble. Somebody gets over 51%, but a government, somebody nefarious, if you will, or a government that wants to kill Bitcoin, if they could buy up 51% of the miners, but people that have a stake in Bitcoin are not going to allow that to happen. They'll basically keep the miners enough. They'll prevent somebody from buying up, or expanding to 51%. That's my take. I don't see it's going to take a lot of money to somebody to try to buy up 51%, but that's next decade. As far as I'm concerned, that's a ways away. As far as my investment goes, I don't really think too much past 2030. I don't know if I'll even own Bitcoin past 2030. We'll know, if Bitcoin's going to break. I mean, most people that are negative on Bitcoin think it's going to go to zero this year, next year. They're not thinking about 2030. But my feeling is that once we get to 2025, 2026, 2027, I think the Bitcoin network will be well over $1 trillion. Some people say it could go as high as 10 trillion. We'll see how valuable it gets. But I'm the miner question, I'm not really worried about it, not this decade. Next decade, I think it comes into play a little bit. But I think enough people that own Bitcoin will not allow it to become vulnerable, if you will.
Nasser, you have a question? Go ahead.
Yeah, Don, you were saying the miners aren't important, the network is, but the miners are the network. The miners are the computers that validate the transaction. They are the ones that make the whole system work. Without the miners, there is no network.
Well, actually, it's the nodes that validate. The miners create the Bitcoin, but it's the nodes that actually validate the transactions, not the miners. So it's two separate groups, the nodes and the miners. So the miners, they have to create the Bitcoins. Absolutely. So those are the ones that are basically every 10 minutes, they create a new block. But they can validate the transactions, but the nodes are actually more important to validating the transactions.
So Don, do you think that, go ahead.
I was just going to say, the full nodes cannot process new blocks. The miners process the new blocks that goes up to the nodes. They're both needed. So I'm just confused because the whole point is, so the way the mining works is the code is they want a new Bitcoin block every 10 minutes. So based on the hash rate, based on how many computers are on the network, the difficulty of the algorithm that they need to solve, which is, it's nonsense. It's just a random algorithm, doesn't actually do anything. Changes to make it so that every 10 minutes there's a new block.
Yes.
Right?
Yes. Okay. So it's the length of the chain, the length of the blockchain. Whoever has the longest blockchain is the chain, right? So only one computer. So only one computer every 10 minutes solves the equation. It's more of a guess than a solution. Only one computer. So let's say that there's 1 million computers out there, right? One computer, right, solves it. And that computer creates the new block. As soon as that computer creates the block, then it basically has to get validated. And the validation, it gets valid. So let's say that you have two computers that solve the equation kind of like a millisecond apart. You have 10 million of them. Like let's say, really, really close. One solves it, and these other ones say, I solved it too, right? But the one that solves it first, they get credit because the nodes all around it, it basically goes out to the nodes around it, not the miners. Goes out to the nodes around it, and the nodes say, yep, he was first. And they basically create that, add it to the block. And once they add it to the block, that other guy that said he got it, other nodes, this happens simultaneously, right? This other miner says, I got it. And the other nodes start going around and said, yeah, he gets it. He has it. He's right. And they start fighting. They basically start fighting over who is right, who is correct. And eventually, one of them has to give up. One of them has to basically say, one of them has to recognize, oh, I wasn't first, right? So the nodes are basically doing all the validation. They're basically saying who's right. So they determine what is going to be, who's going to be the next block. And it all happens within 10 minutes, right? And then you go on to the next. Now, what can happen is they start fighting. And you can actually get like it could like take 30 minutes. They can be fighting for like 30 minutes, seeing who got the last one right. They're still fighting. Who has the longest chain? And the longest chain always wins. And so the nodes are the ones that are kind of validating who has the longest one, who has the longest chain. And the miners are just creating the next block. And every 10 minutes, they just keep creating blocks, and then they fight over the longest chain. And eventually, that's the way Satoshi created it. It's really, really smart. Eventually, they're losing money. Eventually, they have to give up and they have to basically give up on that chain because they recognize which chain is the longest chain. And they eventually have to give up. They can't just think they have the longest chain. They recognize. I don't know what's the longest one before they give up, but it's usually within 30 minutes they have to give up. Basically, they have to recognize who has the longest chain, and they give up, and they go, and they basically all the nodes basically what they do is they transfer over. So so these nodes they're basically locking on to the wrong one, the wrong block, the wrong chain, and then they basically drop it all, and then they basically bring in the one that's correct. And that's how it works. The longest chain always wins.
True, but some of these miners are also nodes. Just to let you know.
Yes, they are. They can be nodes too. But it's
right. But when you're talking about the Bitcoin network, I assume you're talking about the computing process, right? The computational power of the network. When you talk about the network, correct?
Well, no, I'm not. So right now, Bitcoin has a lot of overkill, if you will, on the hash rate. The hash rate does create security, absolutely, but it has a ton of overkill. It can basically be reduced by a factor of 10 and still be solid as a rock. It has a ton of overkill, and the reason why it has a ton of overkill is the demand, because people are out there basically trying to generate money, trying to become miners, and the miners can be nodes. They can validate as well, but they don't have to, right? There's lots of nodes out there in tandem with the miners. They work together, but the overall network, it really comes down to basically security. How secure is the network itself? How much hash rate can basically be destroyed and Bitcoin still be solid as a rock? And there's a ton of overkill. It can drop, significantly before Bitcoin is kind of vulnerable, if you will. And so it's not something I worry about. I don't worry about the Bitcoin network becoming vulnerable because the Bitcoin network is basically shown itself to be resilient. They call it the honey badger. It's been through a lot of, trials and tribulations over 10 years. And so at this point, Bitcoin drops to $5,000 tomorrow. I'm not worried about the security of the network. Yeah, a lot of miners will not be profitable at 5,000 and they'll basically turn off their computers. Absolutely. But the way Bitcoin works, there'll be enough nodes, there'll be enough miners to create security. So I don't look at the Bitcoin network as being, kind of the vulnerability of Bitcoin per se. The vulnerability of Bitcoin, as far as I'm concerned, is where you live. So me being in the United States, my vulnerability is the United States government making it illegal. So if I lived in Japan, I would basically I would still be stacking Bitcoin because I'd be very confident that the Japanese government are not going to make Bitcoin illegal. And so there's not a lot of countries right now that I feel really comfortable with. I think Portugal's another one. If I lived in Portugal, I'd probably be stacking Bitcoin as well. Those are probably the two countries that I like the most as far as stacking goes. So I think the location is really important. But I think the U.S. will not make Bitcoin illegal because of trade, international trade. They don't want to give Japan or Europe an advantage, of basically corporations basically moving to these countries because they can use Bitcoin to do international trade transactions. The United States has always been a technological leader. So by throwing Bitcoin out, it's like throwing the baby out with the bathwater if you basically make Bitcoin illegal, because it has fundamental advantages over transferring currencies across borders. And so I don't, that's one of the reasons why that's why it hasn't been made illegal. It's because of international trade, in my opinion. And so I don't see, Bitcoin going away because of that. Bitcoin, its fundamental use cases are basically, in my opinion, fourfold. The first one, of course, is hodling. And the reason why hodling makes sense is because of the halving. So right now, Bitcoin, they mine 900 a day, so it's about $20 million a day. $20 million a day is nothing. So if you take 9,000 times 20,000, it's $18 million. So $20 million a day is kind of nothing. Well, in 2 years, it drops in half. It goes to 450 a day, so that's $10 million a day. Then in 2032, it drops in half again. That's $5 million a day. So the new Bitcoin coming in online in 2032 is $5 million. $5 million, that's nothing. It's peanuts. So a Bitcoin crashes to $5,000, all it has to do is survive for 8 years, and then it'll start trending up again, because the demand will be higher than $5 million. So eventually, so what happens is that eventually you see these price crashes, and then as the price crashes go down, the supply goes down, so the daily volume goes down. Eventually, all those Bitcoins, the people that want to sell, they sell all their Bitcoin, and then the buyers come in. That's the reason why you have these huge moves. It drops like, 80%. That's kind of what we're seeing right now. I don't know how much dropped from 60,000 down to 18,000. It's not 80% yet. I think 80% might be $14,000, $12,000, which is probably where we're heading. But every time it drops 80%, it turns around and makes a new high. And that's the reason, because of the halving. I've said that Satoshi, he tried to create a transactional digital currency, but he failed because he made it too valuable. And he made it too valuable because of the halving. If the halving didn't exist, then Bitcoin would probably be a fairly good transactional currency, because it wouldn't have this unbelievable value, because it's so, it would have more of an inflationary effect, because it wouldn't be dropping in half every 4 years.
Can I make a comment on that?
Sure.
So Bitcoin only does 7 transactions per second.
Yes.
Visa does 24,000 transactions per second.
Yes.
So how could Bitcoin ever be used as a means for transactions, especially for international trade?
Right. Well, the reason why, of course, you basically level 2 transactions, that's what they're working on right now. You have something called Schnorr transactions that just came in last year. It just came in this year. So they're just working on the ability. So there's 2 new technologies. It's taken them a long time to add them. They were talking about these things back in 2016. One of them is called Schnorr, which allows them to do level 2. And that's what the Lightning Network is. It's kind of a level 2 transaction. So Schnorr allows a level 2, and there's another technology they have. So they're going to have level 2 transactions. So basically what happens is the transactions occur off the main chain, and then they add them to the main chain later. So the actual cost is reduced significantly, and basically the transaction speed goes way through the roof. So
but doesn't that defeat the purpose of Bitcoin? Because then it's off-chain, centralized.
Well, it's not really. Even if you do level 2, it's not necessarily centralized, because centralization is really about basically somebody having access to my crypto, or having ability to change Bitcoin. Where Bitcoin really shines is their governance model. No organization can change Bitcoin. The only way Bitcoin can get changed is if everybody agrees, basically. And so that makes Bitcoin, it's the only crypto that basically has this decentralized governance model. In other words, nobody sits around in a room and decides how to change Bitcoin, which is how all the other cryptos work. Basically, all the other cryptos that get around in a room and said, how are we going to upgrade this thing?
But didn't they change the block size a couple years back?
That was in 20. That was in 20. No, that wasn't. The last time they changed the block size was in 2016. It was
But they
6
changed
years
it though.
ago.
They changed the code.
No.
Is what I mean. They did change
Yeah,
it.
yeah, it was agreed to. Yeah, they did a fork. Yeah, in 2016. Yeah, that was the reason why they did that, is to create level 2 transactions. And that was the big fight. That was the reason why you had the split of BCH and BSV, because they wanted larger blocks. And
So what's stopping
they
them from changing it again?
Oh no, they can change it again, but it all has to be agreed upon. They basically, so it's all done through consensus. That's what the decentralized governance model is. The way that it works is that they put the new changes on the miners and the nodes both, and people have to adopt it. If you don't adopt it, then it doesn't get changed. And so what happened was they basically agreed that we're going to stick with one megabyte block, a very small block. And the reason why they went with small blocks was for security. And the reason why they wanted small blocks is so that anybody could basically own a node. So once you go to 4, 8, 16 megabyte blocks, you need more hardware to do it. And you start creating, these massive blocks because you have more, because you have, if you have like a 8 megabyte block, it becomes really, really big. And so the security basically breaks down. So in a consensus, they decided we're only going to use 1 megabyte, but it's going to be highly secure. And everybody's going, well, if you only use 1 megabyte, it's going to be really slow. Well, yeah, but we can use off-chain. And if we use off-chain transactions, it's really not going to defeat the purpose of centralization. Lightning Network does not defeat the purpose of centralization as long as the transaction eventually makes it to the main chain. As long as it makes it there.
If you do off-chain transactions, right?
Yeah.
The problem of double spending comes back into play. It's possible theoretically to double spend if it's done off-chain.
Right. Yeah. Well, let's see if it happens. And that's the whole
but those
purpose.
Are very big negatives, is what I mean.
Well, yes, but it's the only the thing that's a possible drawback. There's a lot of possible problems. The 51%, of course, is also a big potential problem, right? Double spend, that's a possible problem, but I don't think Bitcoin is necessarily going to be a transactional currency. I think it's going to be too valuable. So you're not going to ever see 1,000 transactions a second, for instance. And also, but the real key to Bitcoin by far is this idea that it truly is without counterparty risk. So if I own Bitcoin, I don't have to worry about a third party taking my Bitcoin from me. That's huge. I don't have to worry on a long-term basis about basically somebody going and changing the Bitcoin network and screwing it all up. I mean, yeah, it's possible, but the odds are low. The odds are much lower.
But hold on. Like for example, if I had a gold coin, right?
Yeah.
I could hand it to you and it's only a two-party transaction, just me and you.
Yeah.
For Bitcoin, every single transaction needs to be validated by the nodes, the miners.
Oh yeah. No, I'm not saying that Bitcoin's better than gold.
Involved. There's always a third party.
Whoa, now let's back
Sometimes
up.
fourth if you're using an exchange.
Let's back up. I have no problem with the argument and the agreement that gold's superior to Bitcoin from that standpoint. That it's basically I own physical gold. I can go and give this to another party, and it's basically there's no way that Bitcoin can compete against that on a security level. I agree with you completely. But where Bitcoin is a different asset, gold does one thing. That's what gold does really well. What Bitcoin does really well is it's liquid, highly liquid. So the third party is the network. Yes, in order for me to basically send money, and where it really shines is basically, I didn't get through all 4 of the use cases. One is hodling, one is transactions cross-border. So let's say that I'm basically Apple, and I want to buy, widgets for my iPhone. I can basically create a deal with this person, or I can do basically a smart contract as well. But I can basically pay them directly with Bitcoin and hold Bitcoin on my balance sheet if I want to, or I can convert it on a daily basis. I can convert it back to cash. But because it's liquid, I can transact with it directly with my my business partner, my contractor. I can do financial business. This can never be done before. I had to go through a bank, right? Now I can basically, you can use Bitcoin basically as a quasi bartering system. And a Bitcoin, as long as Bitcoin is stable day to day, day to day is the important thing because you can convert it to cash on a daily basis. I can do financial transactions. I can pay people basically on kind of a daily basis. And we don't have to go through banks. We can basically do this direct to one another. That's a powerful use case. That's one of the reasons why Bitcoin is not going anywhere. The third use case is collateral for decentralized finance. Now, a lot of people think that decentralized finance is basically a boondoggle and it's never going to work. I'm not in that camp. The reason why decentralized finance has so much power and potential is because it bypasses the banking system. If you can bypass the banking system, that is very potent because the banking system has a lot of basically problems. It has a lot of risk. And so if we're basically dealing outside of it, as long as I can trust it, as long as I can trust the decentralized finance system, then it's going to work. And so where Bitcoin comes in is that Bitcoin can be the foundational layer of decentralized finance. Now, what is the foundational layer? It's basically collateral. You're basically collateralizing loans with Bitcoin. And that is very potent. It's a very big use case. It can be massive. The other use case for Bitcoin is collateralizing stable coins. That's just two. So I'm giving you 4 use cases. This is the reason why Bitcoin's not going anywhere. These are massive.
Luna tried that. Didn't work out so well for him.
You're absolutely right. Yeah, Luna was a total boondoggle. And the reason why Luna failed, and the reason why Voyager failed, is because they were not regulated and they were basically being cowboys with the risk management system.
I mean, if you using Bitcoin as collateral for
they were
Bitcoin, like
absolutely yes, and they were, and other decentralized finances are going to do it too. But where they failed was the way that they use risk management. There was nothing wrong with using Bitcoin as collateral. The problem was they didn't have enough collateral, and the people that they were basically making loans with, they were basically being cowboys. They didn't have any regulation, so they were trying to make money. They were trying to. It's basically if you had a bank and it wasn't regulated, right? You would have Lunas and Voyagers out there with these banks, right? Banks would be doing things that were a little bit crazy, right? So they were doing some crazy stuff. Voyager, they only had like 6. They were loaning out for their entire balance sheet. They only had like 7 creditors, 7. They were basically loaning out, big chunks of their balance sheet to hedge funds. It was insanity. But there was nothing wrong with using Bitcoin as collateral. That wasn't the problem. The problem was that they were loaning money to hedge funds, which was insane. And they were loaning money. Luna was basically a Ponzi scheme, by and large. They were not generating enough income. Voyager went south because they loaned money to a hedge fund, and the hedge fund went bankrupt. So suddenly they had a hole in their balance sheet. So the risk management failed. There's nothing wrong with using Bitcoin as a collateral, as a base layer of the collateral system to DeFi. There's nothing wrong with doing that. Go ahead. I like your questions.
I was just saying. So how is Bitcoin not a Ponzi scheme?
The reason why it's not a Ponzi scheme, first of all, is it's lasted. Well, Madoff probably lasted 10 years as well. But a Ponzi scheme usually doesn't.
Bitcoin is also 10 years, by the way.
Yeah. Madoff was around a long time. The reason why Bitcoin is not a Ponzi scheme, in my opinion, is that Ponzi scheme are basically selling something that has 0 value. I think that the Bitcoin network has value because it's secure and it's liquid. There's never been an asset that's existed like it, and I don't think we know how to value it. It's basically a liquid collectible, a liquid barter system. It's like I can compare it to like a Wayne Gretzky card that's been broken up into 21 trillion pieces. So it's, I think it's 2,100 trillion, 21 million Satoshis. So if you take 21 million times 100 billion, I think it's 2,100 trillion. So 2,100 trillion Satoshis. If you broke a Wayne Gretzky card, a rookie card, into 2,100 trillion pieces and let everybody basically have a partial ownership of that, and then made it highly liquid where anybody could buy and sell 24/7. That's basically what Bitcoin is. Now, is a Wayne Gretzky card as valuable as the Bitcoin network? That's the question. I think it is. I consider it basically just a collectible, the collectible are Satoshis, and the Satoshis have value because the network itself is liquid. And if the network wasn't liquid, and then if the network wasn't 24/7 pricing, then the Satoshis would be worthless. But because the Satoshis are liquid and because they are priced 24/7, it has incredible value. That's the way I look at it.
So if I understand you correctly, you're saying the value of Bitcoins or Satoshis comes from the network, and the value of the network comes from the Bitcoin.
Well, Bitcoin and Satoshis are the same thing. There's really no such thing as Bitcoin. Right, there's only Satoshis.
But if I understand what your argument is the value of Bitcoin comes from the network.
Yes.
And the network, the value of the network comes from Bitcoin. So it's like a circular argument.
That's a good. I like that. That's a really good point. I like the way you frame that question. So, in my opinion, what Satoshi did was he designed basically a secure network that runs on something that's never ever actually been done before. It's almost circular. You're right. It's almost circular. He actually created this network, this network that basically runs on an energy source like gasoline or whatever, and it creates it on its own. So it creates the blood that it needs to survive, but the organism itself that creates the blood, it's almost like circular. What comes first, the chicken or the egg? Your question is beautiful, actually. It's a really beautiful question. It's like, how can that work, Don? You're basically saying it's circular. Well, in actuality, it is circular. And this is the reason why this is actually Bitcoin's flaw. And so there's going to be somebody, and I'll tell you the flaw here. There's going to be an economist that actually comes up with some type of a model that proves why the Bitcoin network holds value. But he's also going to explain the flaw. And here's the flaw. The flaw is that at some point, Bitcoin hits a limit. It hits a ceiling. And the reason why it hits a ceiling is because it's all based on supply and demand. So the value of Bitcoin is valued based on its need. So what is its need, right? Its need is as a counterpoint to the financial system. So if the financial system is strong, then Bitcoin is not needed. But if the financial system is weak, for instance, the weakness in the financial system is that it costs me money to transfer money across borders. If it didn't cost me any money to send money across borders, I don't need Bitcoin. So the need exists for Bitcoin. If I could put money in a bank and it was secure and nobody would take it, I wouldn't need Bitcoin. Also, if the currency was deflationary, I wouldn't need Bitcoin. But there's no deflationary currency that exists today, so I need Bitcoin. So the Bitcoin network is predicated on a need. That is the reason why the circularity works. However, at a certain point in the future, Bitcoin will collapse in price because the need will hit a ceiling. We don't know what that ceiling is. We are all guessing. My guess is that Bitcoin is worth much more than $1 trillion because the need is high at this point. But at what point will the need decrease? I don't know.
Hey, Don, let me ask you this. I'm actually looking to buy Bitcoin again at some point, but my strategy is to wait for the Fed to start expanding their balance sheet again. In my experience, there's kind of a one-to-one correlation there with the price of Bitcoin. What's your catalyst for the next wave?
Yeah, beautiful. That was what I just said, right? Is that the only reason why Bitcoin has any value is because there's need. And you're saying the same thing. If they blow up their balance sheet there's going to be more need for Bitcoin. Yeah, beautiful. I love that. Love your questions too. So the catalyst. So for me, what I've been doing is that I've been looking for other cryptos that I think have a good use case. I actually bought, my first buy on Bitcoin was $440. Now, why did I buy Bitcoin at $440? The reason why is because that was the first time I did a deep dive. I did a deep dive and I noticed two things with Bitcoin. Number one is you can't kill it. How do you turn Bitcoin off, right? It's really, really hard to kill. Number two, the halving. The halving basically, with the halving, it's like a built-in engine to make it go higher in value. So, however, once Bitcoin got above $10,000, I didn't think that the risk reward for me made sense to keep stacking. So I stopped. So my last purchase was at 8,000. I bought one at 8,000 was the last one. I bought one at 3,500, one at 8,000. That was it. That was my last two. Everything else was bought under $1,000. But I added a couple more, but I stopped at 10,000. And you know, for me, I really like Bitcoin under 10. So if it crashes down to 10, I think that's where you buy. You know, 12, it gets really interesting, even 14. But anything above 14, I don't really like it per se, even though I think it's going to 250,000, which, what is that? That's like a 20 bagger, right? At 10,000, it's like a 25 bagger. My target for Bitcoin is 250,000. So once Bitcoin got above 10,000, I started looking around for other cryptos that I thought had more upside. My first purchase was Ethereum. That was my first alt. I got in at 200. My cost base is $200 Ethereum. So I'm good at buying cryptos low. I'm always looking for cryptos that have a use case that look like they're going to go silly. So I missed Solana. I didn't look at Solana until it got to about 150. I looked at it at 150. I thought it was too pricey. I passed. It went all the way to 250. And I basically said, if it crashes, I'm going to buy it. I'm going to start buying it at $50. I'll buy it to the bottom. So I did. And now I have my average cost in Solana is 33, which I think is a steal. And I'm staking it 5%. I thought I did really good with Solana. The reason why I bought Solana is because I think it's a backup to Ethereum. So if Ethereum doesn't become the king of crypto, I think Solana has a chance to either be the king of crypto or compete fairly well with Ethereum. Solana could still fall flat on its face. It's not stable. A lot of people laugh at it. But I was in software. I was a computer programmer. I know how difficult it is how long it can take to get the bugs out of software. It can take a long time. So it might take Solana 3 years to get stable. But the one thing I have learned from software is eventually you can get it right. And so I think eventually Solana will get it right. So I look for use cases. Solana is basically a smart contract platform. Ethereum it is. Bitcoin does not compete with these. These are basically separate use cases. I got an HBAR. I started buying HBAR cheap. I'm not stacking Solana or HBAR anymore unless they basically crash. So if Solana goes under 20 or goes to 20, I might buy. I doubt I'll buy any more HBAR. I think I have plenty of HBAR. And then I have another one that's a total lottery pick that I think is going to go to zero. It's going to go. It's such a long shot. I don't think I'm going to mention it at this time. I don't want to. It would take me a while to explain it. But for me, the catalyst for crypto is Bitcoin. It's always been Bitcoin, right? And the reason why is because Bitcoin is the foundation. It's the layer of crypto. Bitcoin has to work for Ethereum to work because Bitcoin has to work to be the base layer. It has to provide the collateral. And so that's the reason why Bitcoin is always the leader. That's why everybody follows Bitcoin. It is the base layer. I don't see anything else removing Bitcoin as the base layer. And so that's the catalyst is going to be Bitcoin.
Don, in what scenario would you say you were wrong and this thing is dead? Like, what would the scenario be?
I think Bitcoin would have to go under $100. If it went under $100, I would basically start to question that it has any chance of coming back, of surviving. But it'll be interesting. I mean, even if it went under 100, it wouldn't shock me if it starts trending because of the halving. The halving is the key to it all. I mean, it might take 10 years for it to come back. But I wouldn't really start to question Bitcoin until it went under 100. You know, to me, if it went to $500, it really wouldn't shock me. That's just the nature of Bitcoin. It's very, very volatile. And you have to think in terms of crypto as a very speculative investment that can go to zero. That's how you have to think of it. It definitely would be very painful for me. So 6% of my portfolio cost basis is in crypto. It's almost 7, 6 point something. I'm currently not stacking. I only own 5 cryptos, and I own 6. I think 5 or 6. I'm at 6%. So 6% would be a big hit for me. If they all went to zero, 6% of my portfolio, that'd be painful.
Out of curiosity, how did you come up with the $100 price target? Because that's 99.99% below its all-time high.
Yeah. The reason why is because it started at 1 cent and it went to $1. But Bitcoin Bitcoin became Bitcoin when it crossed $100. So it started trading under $1, but from $1 to $20 was kind of where Bitcoin got its footing. And I think Bitcoin became kind of a real thing above 100. So for me, $100, and I actually started looking at Bitcoin at 250, but I didn't buy it. I didn't do any research on it until 440 because I bought it when I did research. So I started looking at it around 200, 250. So it went to $1,000. And then it crashed to 250. So I didn't look at Bitcoin. I mean, I wasn't even paying attention to it until it crashed from 1,000 to 250. And then I started just watching the price at 250. And then I actually started listening to Cliff High when it was around 250. But I didn't do any research. But Cliff High was talking about it. And I thought there's no way that we can have private money. That was my thought. It was like, you can't have private money because that's what I thought Bitcoin was. I thought it was basically private money. And I thought, there's no way they're going to allow it. And so I thought Cliff High was off his rocker. I thought he was nuts. But then it got to 4, and it started trending up from 250. It got to 400, and then right at 440, I basically said, maybe High's right. I'm going to do some research on this thing. I did a deep dive, and I was sold.
Well, Don, you were once again very generous with your time. I'd like to give anyone a final opportunity to come up if you got another question.
Last question.
All right, Don. Well, if nobody has anything else, if you don't mind, I'd like to put you through the lightning round. It's kind of something we do around here now.
Go for it.
All right. Okay. What breaks first, the Fed or the Eurozone?
That's a tough question.
We try.
I'm going to answer it kind of weirdly. I think that the Fed loses control first, but the Eurozone breaks up before the Fed breaks up. If that makes any sense.
Okay. Will winter be a turning point for Europe this year?
Gosh, good question. I think it's going to be next year.
Okay.
2023.
All right. Who was better, John Wayne or Clint Eastwood?
Eastwood.
I see, that is the correct answer. Funny story about that. I don't know if you ever saw the movie Pink Cadillac, but that was filmed largely in Reno, Nevada. And when I was just a year old, we lived there, and my parents got to go on the set. There's a bull riding scene. Anyway, it's
Well, yeah. If the question was who was better in westerns, it would be Wayne.
it was. Yeah.
But Eastwood, he's got a huge body of work. I mean, gosh,
Yeah, he
he's
does.
made some great movies.
Yeah.
Wayne was great. Wayne was great in westerns, though.
My
Good director,
portfolio
too.
is 100% cash. How do I divide it out between gold stocks, silver stocks, and Bitcoin?
Okay. I'll
Percentages.
let you keep 10% cash.
Okay.
I'll go 10% Bitcoin. We got 80% left. I'll go 50%. 50%. Is this gold stocks or gold and silver both?
Gold stocks, silver stocks, and Bitcoin, the three.
Oh, okay. Gold stocks. We have 50% gold stocks, 30% silver stocks. The reason why is because silver stocks are going to outperform, and it's hard to be overweight silver stocks. So you got 30 silver stocks, 50 gold stocks, 10 Bitcoin, 10 cash.
Okay. Which has more upside in percentage terms, gold or oil?
Gold all day long. Gold.
Okay. The Doobie Brothers or the Almond Brothers?
You should, on the gold and oils, you should ask what the top is on both. I think that would be a better question, right? The Doobie Brothers or the Almond Brothers? I would have to say the Almond Brothers. Yeah, the Doobie Brothers were decent, but they weren't a great band. The Almond Brothers they had a lot more potential, but they didn't reach their max. One of the Almond Brothers died a little early, right?
All right. See, these are some good answers, man. I like it. Okay, how about the Eagles or the Rolling Stones?
Oh man, the Stones all day long.
Okay. The Stones or the Doobie Brothers?
The Stones all day long.
All right. What happens first? QE5 or the CBDC?
You mean QE10, right? We're already at QE5.
QE infinity.
Yeah, that's an easy answer, QE5.
All right. A sirloin, a ribeye, or New York strip?
The New York.
Okay. Where does the gold price end the year?
Oh, yeah. Now we got better questions. It's going to end the year at, let's see, how far high do I want to go? I hate to tell everybody this. I hate to tell everybody the bad news. 1825.
Okay. I'll take that. Where does silver price end the year?
I wish it was higher. Silver price is going to end the year at 2350.
Hey, that's pretty good. Okay.
Not really. Wish it was better.
Yeah. How about oil? Let's throw oil in there. What is oil in there?
There we go. Oil. In the year. Okay, so oh man, this one's really hard. I'm gonna go with 108. I hope you're writing them all down. 108.
Okay. Do you track uranium much? Can I ask you a uranium question?
No, I don't track it. I'm a gold, silver, crypto guy.
Where does the DXY end the year?
Oh, that's good. DXY. Oh yeah, how far is it going to fall? These are tough questions. When does it start down? It starts down in October. Do we get to 106? Oh man, that is hard. I wish I had more time. I don't know if I should say we're going eeny, meeny, miny, mo. I'll split the difference. I'll go 105.
Okay. All right. Bitcoin. Where does Bitcoin end the year?
27.
Whoa. Okay. So now you got to make me follow up with the S&P.
Is Bitcoin going to jump that much? Yeah, I'll go 27. That's a tough one. Might not, I think I might be too aggressive on Bitcoin, but I'm going to go 27. S&P. Oh, yeah, that one's pretty easy. 3,200. That's easy.
Okay. Which broad market has the most downside risk? The Dow, the Nasdaq, or the S&P?
Well, the Nasdaq is sold off. They're sold off more, right? So it's probably going to be the S&P from here. I think the S&P will fall harder than the Nasdaq. S&P, not by much though.
What will be the biggest surprise to finish the year? I don't care. Geopolitics, whatever. Biggest surprise. What's the black swan? Predict the black swan, Don.
Yeah. The biggest surprise is going to be the number of mass layoffs.
Okay. All right. Okay.
Yep.
Well, Don, once again, thank you for coming in, man. That was a real treat to have you. And thank you for taking the time to answer all those questions with such detail like you do. And to come, it was really a pleasure to have you here, man. I can't say it enough. I really thank you for coming in.
How many people stuck around? It's been a long one. Jeez,
there was quite a few earlier. We're down to, I don't know, 78 or something now, or something like that.
Oh, that's pretty good. That's pretty good. Not bad.
Mm-hmm. Yeah.
Every broadcast on YouTube also.
Awesome.
Yeah.
Awesome. I appreciate that. That'll be good. So since you're doing that, since you're doing the rebroadcast, I don't know how many people are going to last till end. So for my website, Gold Stock Data, are you there?
Yeah.
Okay.
Yeah.
So we're going to give people a discount if they want to join Gold Stock Data. So the code is, it can be a lowercase or uppercase. It's spaces, just like, spaces, 15. So for 15% off. So it's going to be good for 2 weeks. So you can join Gold Stock Data. It's usually 149. So you get 15% off if you guys want to join. Spaces 15 as a code. Got it?
Right on. That's awesome. I'll join tonight.
Sounds great. All right, guys.
Well, thanks. Any closing thoughts before we go?
Yeah, let's do this again in the end of October, like every month. Yeah, but next time let's try to do it for 2 hours. this thing
Charge your phone halfway and you'll be fine.
The phone did great. I'm shocked the phone did this well, but I bought a charger for next time, one of those wireless chargers. But still, I mean, geez, guys, this is the longest interview I've ever done. 4 hours. That's insane. Yeah, let's try to do 2 hours next time.
No, that's great. Hey, we covered a lot of ground, and it's chock full of stuff.
Yeah, and let's invite Larry back again. Let's do me and Larry again.
Hey, that sounds good. Look forward to it. Thank you, Don.
All right, I'll see you guys later. I appreciate it.